This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney. End earnings season. We just heard from that blue chip Dow Jones stock, Frito-Lay.
Yes.
Surveillance Frito-Lay correspondent, Kriti Gupta, with the complete team coverage.
Yep.
I guess better than good for Pepsi, better than good for a lot of others.
Yeah, Mountain Dew, Frito-Lay
There you
chips,
go.
all kinds of stuff. That first quarter revenue grew 2.7%, beating the analyst estimates. So, I mean, we've seen that time and time again. It's the chip side of the business. I know you're a big Pepsi guy, but it's the Frito-Lay that's been kind of moving this story here.
I mean, that's some of the granularity you're going to see here. We got to get Kriti back on because she'll go, Mountain Dew, like I'm into it, but it's really Dr. Pepper.
But she's over in the London office. What do they get over there?
Dr. Pepper. She hasn't flown in. It's part of her deal. We say good morning on a Tuesday. Of course, all eyes on Tesla. Is Ludlow awake yet, Bob? I mean,
No.
He's still in beauty rest, right?
Yep.
He's not out trying to get the Tesla recharged. We're trying to schedule Ed Ludlow. We'll see on that as we all wait this afternoon. Carol Massar, Tim Stevanovic with Tesla earnings this
exactly,
afternoon.
after the close. And I'm going to listen to that conference call because it is all about Elon Musk and what he does in terms of putting out some strategy. Pricing strategy. Are we cutting prices? Are we raising prices?
Our strategy is to go digital. We're on Apple CarPlay, Android CarPlay as well, Android Play, I should say. That's getting bigger and bigger. The Bloomberg Business app, it's free. Good morning on YouTube. Search Bloomberg Podcasts. The live chat is very live. I mean, I am not on it yet, but I'll get on there as we chime in with Lisa. We needed a data check of buoyancy off the carnage last week from the Interactive Broker Studios. Our Bloomberg Business Flash, Lisa Mateo.
You got it. In futures, they are on the rise after yesterday's rebound on Wall Street. Right now, we have NASDAQ futures up 0.4%, S&P futures up 0.3%, Dow futures up 0.2%. The 2-year yield at 4.99%, that's up a basis point. The 10-year yield at 4.62%, and that's up a basis point as well. Earnings in the spotlight. You guys talked about it. About 180 companies report this week, representing over 40% of the S&P market value. They're already starting to pour in, so let's get right to them. You mentioned PepsiCo. We'll check in with their shares right now. They're down about 0.2%, but sales did beat expectations the first quarter. That was strong growth outside of North America. Then you have UPS. They're up 3% right now. Profit topped estimates. That was thanks to its headcount management, also restructuring of its delivery routes. You have Spotify. They're up 7% right now. Reported first quarter results in line with forecasts. The company continued to add some new features. Paid subscribers, they rose 14% year over year. Total revenue also grew. And yes, after the bell, it's Tesla. Their shares up 0.5%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. The granularity here of earnings. I mean, we're going to have fun with this. Paul and I, we go to the FA screen.
Yep.
Try to go down the income statement quickly and see what the dynamics are. But Paul, the real issue here is it's corporations adapting to the new yield structure.
Yeah.
Which is why we're a heavy bond strategy today. We're a heavy yield We're going opposite of what you think. You think we'd load the boat with equity analysis. No, we're loading the boat with fixed income analysis.
Good.
And we start strong. Why don't you bring Gennady in here on the whole new world after all that corporations are living?
Gennady Goldberg, head of U.S. rates strategy at TD Securities. That's Toronto Dominion, for those of us that actually have a little history on the street.
Maple Leafs won.
I know. There you go. Exactly. Gennady, what is your Federal Reserve going to do here? Because if they are, in fact, data dependent, they can just sit on their hands and just do nothing here for the rest of the year, arguably. What do you think the Fed's going to do here?
Yeah, I mean, I think that's been the talk of the town, so to speak. We think they'll cut in September, so we think we've got 2 cuts penciled in for this year. Question is, what gets them there? I think they need a level of comfort that inflation's coming down. I think they are waiting and watching, which leads to, unfortunately, a very boring market for fixed income strategies.
Are corporations adapting to your new world? What's fascinating to me is everybody 18 months ago, pre-Jim Bianco, good morning, Jim Bianco in Chicago, with a call of 2023. But the bottom line is the world's changed. Our corporations adapting to a new higher yield regime, to a new higher R-start.
I think some are and some aren't. And I think it's going to take a little bit of time to flush out exactly which one is going to adapt and which one isn't. So if you're a very healthy corporation with a very low debt load, you are absolutely adapting. You probably got cash on hand, so your kind of net income from all those cash holdings is actually going up. Your debt burden's not going up because you've locked it in at low rates. The longer we stay here, the more that starts to become a pressure. If you're a lower quality corporation, let's say your credit isn't so good, it's going to cost you a lot more to refinance.
So it's almost a barbell outcome for corporations.
Exactly.
What do you suggest? And this is away from your remit, which is full faith in credit. But is the big surprise of the next 8 days that tech capitulates and it announces bond issuance?
I think that'll be interesting. I mean, if these companies actually do need a lot of financing and the yields on those start to go up, I think that's going to be pretty interesting because historically tech's been very cash heavy. And they've actually done okay in this environment. Now, if they start to issue debt because they actually need financing, that might become problematic.
So, Gennady, we're sitting here. I'm looking at my 10-year on my screen here, 4.62%. Where do we end the year, do you think? I have no idea.
We've revised our call a couple times this year. I think it's been a
like
tough one.
This morning at 5 a.m.
Not quite, but almost there. I mean, in the spirit of full disclosure, the market's been pushing back rate cuts all year long.
Yep.
We pushed ours back a little bit as well. I still think there's some room for cuts. I think inflation's going to slow, especially in the next 6 to 12 months. I think growth is going to slow down. The question is how fast. We've got them just below 4%, so we've got a 3.9% 10-year forecasted by the end of the year. I don't think that's outrageous. This market can move 15 to 20 basis points a day just based on a single data point. So,
what do you think the key data points are for Fed Chairman Jay Powell and his crew?
Inflation, and inflation.
So this PCE deflator on Friday, a key data point, right?
Absolutely.
So Tom's going to have to come in. He's going to have to come into work on Friday.
100%.
Okay.
Tom,
we'll
need you here.
We should do a tag team, get Damien off the golf course.
Yeah, good luck with that.
Have a blowout Friday meeting.
Yep. So what do you think this PCE deflator number, what do you expect here? How are you guys viewing inflation, and how do you think the Fed's viewing inflation?
I think the Fed's looking at it component by component. I think there's a lot of folks out there who are looking at inflation actually re-accelerating. That's not really what we're seeing. We're looking at some of the stickier components, some of the follow-through components, like insurance, like vehicle repair. All of that stuff is actually lagging mainline inflation, right? All of us who are, who've acquired cars in the last couple of years know it's much more expensive to repair them. The insurance companies have caught on to that, and they're starting to raise prices. If you look historically, it tends to happen. It tends to be about a 1-year lag. What is interesting to me is that you've got, housing inflation actually starting to come off, and I think that's very encouraging. That's a third of the index, depending on which one you look. You've got other sources of inflation actually starting to come off.
But the heart of this, into your academics, the 30-year bank rate, 7.49%. That's a new recent high here, 7.5% 30-year mortgage. The arch question is, can a Fed be ex ante, or are they by requirement ex post? I see no evidence that they can be ex ante. I see no evidence out there at all.
I think they're trying their best to deliver that soft landing. I think that Powell is really trying his darnest. But you're right, it is ex ante, and it's good. We're going to see if they can actually deliver on that. I don't know if they can.
Okay, Gennady, thank you so much. Gennady Goldberg, this one, you got to get out of the chair because Lord Barr's here and the Tigers won, so he gets. He's the only reason the chair. If the Tigers lose, we put Michael Barr on the food court.
Yeah, exactly. Gennady, thank you.
Gennady, thank you so much. Gennady Goldberg with TD. Make yourself comfortable, Michael Barr. It's good. Futures up 16. Futures up 16. Dow futures up 81. This is exciting. I mean, the Tesla thing. It could go like 14 weeks.
Oh, boy, I have no idea.
Is a Musk on the conference call?
Oh, yeah. Oh, boy.
I've never heard a Musk conference call.
Oh, you want to wake up from the surveillance nap for that one.
Yeah.
And get a surveillance beverage.
Have you heard one?
Oh, yeah.
Does he go mental?
Oftentimes he does. It is literally, you put it in the background while you're,
Every call is different, folks. Paul and I, what was your record number of conference calls in one day?
Yeah,
I think mine was like 6.
Yeah,
and everyone's Diamond goes mental.
Yep.
Diamond, they have to like medicate him.
Yep, I listen to that one always.
He really gets going over at JP. Others are like, they're like this. Some of them are like Michael Barr. Futures up 17 with our news fired up. Michael Barr.
Thank you very much, Tom. Paul, Lisa. Former President Trump's criminal hush money trial continues today in Manhattan. Back on the stand, former National Enquirer publisher David Pecker, who prosecutors say worked with Trump on a so-called catch-and-kill strategy to bury negative stories during the campaign. Also today, prosecutors are expected to tell a judge that Trump should be held in contempt over a series of posts that they say violated an earlier gag order. The city of Baltimore officially filed a lawsuit against the owners and managers of the Dolly container ship. The suit alleges alarms showing an inconsistent power supply on the Dolly sounded off before leaving the port of Baltimore. Baltimore City Councilman Zeke Cohen.
This is about Baltimore uniting together, standing strong amidst this tragedy, and making sure that people are held accountable that played a role in it. 6
construction workers on the bridge were killed. Today, the Senate plans to vote on a $95 billion war aid package to Ukraine and Israel. Finally, now I am about to go mental here. New York Yankees manager Aaron Boone was ejected by umpire Hunter Wendelstedt 5 pitches into the game against the Oakland A's over a remark from a heckling fan behind the dugout aimed at the plate umpire. Now listen to Wendelstedt yelling at Boone on the Yes Network.
You're not yelling at me. I did what I was supposed to do and check. I'm looking for him to get hit by the pitch. You got anything else to say? You're gone. Okay?
Oh, okay, Hunter. Wow. You know what? We're not going to need a John Boy breakdown of that one. We got a very clear. There you go. And now Aaron's saying I didn't say anything.
Boone after the game.
I really didn't even go after Hunter. I was more upset that, on the appeal, and I said, Hunter, you can call it too. And he came back at me pretty hard, to which I didn't respond. I just said, okay. Went down, and it's embarrassing. It really is it's embarrassing.
Oh, and the Yankees lost to the A's 2-0. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
They have the same problem like Premier League. I'm watching the VAR debate and this debate and that. F1's having it's all this technology into the game, and the umpires, I think, have sort of lost it because of all the this ball was a quarter of an inch outside the plate.
Well, in this case, it did hit the player. What Boone was questioning before that was, did he take a swing? Because if he takes a swing, it's irrelevant because then it's a strike. But it was not. But then after all of that, and then some fan goes yakking behind you.
It's probably Paul Simon. Paul Simon's got seats down there.
I've never seen anything like that. It's like, come on.
Well, how do you hear so clearly these days? I mean, it's unbelievable. Like, you heard these guys having their conversations. I never heard that before.
I've never heard that. I'm amazed, Lisa, because she's got that beautiful gold Yankees jacket. Isn't like flying across the room, swinging a bat the other way.
Well, we medicated her this morning, so she'll be.
The Tigers 7, Tampa Bay Rays 1 yesterday.
Yes,
big win for the Tigers.
Thank you for calling me.
Yeah.
What's really important? It's the first place Baltimore Orioles.
Yes.
So the sun rises on Bloomberg Nation.
Yes.
Good morning, Mr. Bloomberg and Mr. Rubenstein. Noticing that the Orioles are doing better than good. Futures up 19, Dow Futures up 95. This is Bloomberg Surveillance.
A day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures advancing after stocks rebounded Monday trading, ending that tough sell-off. Right now, we have NASDAQ futures up 0.4%, S&P futures up 0.3%, Dow futures up 0.2%. To the bond market, the 2-year yield at 4.99%. That's up a basis point. We have the 10-year yield at 4.63%, and that's up a basis point as well. To commodities we go. Spot gold lower at $2,300 an ounce, and then we go over to oil. Brent crude at $86 a barrel, NYMEX crude at $81 a barrel. On the economic calendar for today, new home sales for March, but all eyes, yes, on corporate America with earnings. We have more coming in, starting with General Motors. They're up 4%, expects better profit this year after a strong first quarter. Strong truck sales in the U.S. actually helped it raise 2024 guidance by $500 million. Then General Electric, they're up more than 3%, raised a full-year profit guidance for its aerospace business, and that was driven by an increase in revenue from commercial aircraft engines and also services. And finally, Swiss drug maker Novartis, ADR's up 5% right now, raised its forecast as sales of medicines for heart disease and psoriasis actually outpaced expectations. That gave the stock its biggest boost in 9 months. That is your Bloomberg Business Flash. Tom and Paul.
That's perfect. That's hugely valuable. What's so important there, Lisa Mateo, thank you, Paul, is she mentioned sales. She mentions revenues. It's all buried within the verbiage of what does it mean down the income statement, but I'm completely focused on the revenue dynamic right now. I just think it's a huge deal.
Yeah, that's something that Gina Martin Adams called out, in a couple quarters ago.
You're starting to sound like me. I mean, you okay?
Yeah, working on it.
Okay.
Yeah, all good.
Okay.
But yeah, Gina Martin Adams, she's been calling out revenue here. You got to focus on that, and that'll be the source of upside growth relative to expectations.
Yeah, have some Tang Zero. That always gets it. It gets it going. Here's the way we do this. We're rolling with Gennady Goldberg, Jeff for you to join us as well, Stephen Stanley, Thierry Wizman. Just a great list. Michael Darda later in the 9 o'clock. And right now, Tom Satoris joins us with Strategist. And again, we're really keeping a focus here on the yield dynamic into earnings, the rate dynamic and all that. Tom, when you synthesize a Strategist view, is it a view of a better nominal GDP, a better, more vibrant corporate world, and does that mean a more higher sustained yield moving forward?
The short answer I'm going to say, and by the way, thank you for having me on this morning. The short answer I'm going to say is no, not really. What we're looking at is an overstimulated consumer, which is pushing up inflationary pressures and making them even stickier than they otherwise would be. And that is resulting in higher inflation expectations and higher real yields in the intermediate term. The growth potential of the U.S. over the intermediate to longer term, it's better than it was last decade, where it was maybe 2%. But that growth potential this decade is probably only 2.5%. So we're not a whole heck of a lot higher.
Well, let me cut to the chaser because I got to make some money. Are you saying load the boat on the full faith and credit 10-year, price up, yield down?
At some point in time, but this is going to have to be a tactical trade because interest rates, in my opinion, are going to be very volatile in both directions for not just this year, but for years to come. This is the new norm we're in. For the most part, with a 10-year treasury at 4.60, a 2-year treasury at about 5%, I think there's value there now. But if we were 50 basis points lower, I'd be taking the other side of that trade.
All right, Tom. So should we run into the 2-year at 5%, or do we maybe take a little credit risk here and think about investment grade or maybe even high yield?
Well, with credit spreads as tight as they are today and the expectation that we're going to continue to see the U.S. economy migrate towards a more, we'll call it sustainable equilibrium, which means some adjustment in the labor market, I'd be migrating more to treasuries at this point in time than corporates, although we maintain a fairly large overweight to investment grade corporates at this point as well. But if we're adding exposure, I'd be adding in the government side with the 2-year approaching 5%.
All right. So, I mean, I think one of the issues here for investors is this Federal Reserve. What are they going to do here, and when are they going to do it? Are you in a camp that maybe they don't have to do anything here if they are, in fact, data dependent, that they can just kind of sit with rates right where they are?
Well, I've always been of the view that the last 2 rate hikes actually should not have transpired. They should have accelerated the pace of balance sheet reduction. But we're here now, and we got a 5.5% Fed funds rate. So I do think at some point in time this year, there's scope to bring the funds rate down to 5%. So 2 cuts. Now, those 2 cuts have shifted further back into the year. So now we're looking at September and December. But I do think that there should be a fine tuning of the Fed funds rate. But I don't think that they should change the pace of balance sheet reduction. And that is probably actually going to happen sooner rather than later. So I think the bottom line is the Fed wants to do something. They want to fine tune the pace of policy tightening. They just don't have the data that justifies it, which makes it a very unpredictable situation.
All right. So, Tom, I guess the question is, if I want to stay in treasuries, do I go to 5% on my 2-year, or do I take some duration here, maybe go out to 10 years and get 4.62%? How do you think about that?
Well, we're taking showing some courage here this week. We're ahead of a 2-year auction and a 5-year auction and a 7-year auction and inflation data. And by the way, a Treasury refunding announcement coming in a little over a week. We're actually adding duration at this point in time, going out to as far as the 10-year, even 20-year part of the curve, because our argument is take all of the economic data and put that aside for just a little bit. We have a Treasury cash hoard of about $1 trillion that has built up over the last month and a half because of tax payments. And the Treasury is going to very likely slow the pace of debt issuance in the second and third quarter and flood that cash into the market, into bank reserves. That should, after this week, begin to put a cap on rates for now, which provides what we believe will be a tactical window for a duration long. So we're taking showing some courage here. We're actually putting a duration long on as of this week.
So, Tom, what's so important with this is then with that massive wall of cash, good morning, Lawrence McDonald, with that massive wall of cash, do you impute a long-term inflationary trend where Jason Trennert says I need to be in equities to participate in that long-term inflationary trend?
Well, yes, we do. And the way I would frame this is that nominal growth is going to be higher than it was last decade, in part because, as I mentioned, we got a slightly higher growth potential, but more because we have overstimulated and we continue to overstimulate. So inflationary pressures are higher, but that does translate into higher free cash flow, particularly into what our previous guest called it, higher quality companies with really strong balance sheets. They're looking at nominal growth higher, free cash flow higher. So this does give you a bias towards equities, especially if you assume the Fed is going to be easy into the slightly higher or moderately higher inflationary regime. So absolutely, I think that leads you towards equities more.
Got to leave this here. Tom Satoris, was he talking from the Tom Keene ML
I think
there?
so. Yeah, he knows what he's doing.
I'm sorry. I'm looking at this in a nominal way. This goes back to Kudlow at Bear Stearns a million years ago. Nobody looked. They all look real. You know, we had Volcker inflation, so we shifted from a nominal to a real analysis. And Satoris is saying, whatever you do, you got a boosted nominal.
Yeah.
Which means you got boosted revenue. You cut out the income statement, and if you're optimistic about America, you believe in a better free cash flow.
Yeah, absolutely. And that's kind of what I think a lot of analysts are looking for this quarter when we get these numbers.
I don't know. That's what we're going to see. Got a great lineup here. Jeff Hughes is Jeff Hughes next? Yeah,
I think so. Yeah,
he's next on the date calendar. This is like too much.
It's good stuff here today. I don't know.
What is Torsten Slok saying? You got a memo out here, Paul.
Yeah, I mean, I just saw great stuff out of Torsten Slok. The Marshall Plan, think back, Tom, was 5% of U.S. GDP, 1947 U.S. GDP. The U.S. fiscal response to COVID was 20% of U.S. GDP. Just extraordinary when you think about the financial stimulus into this economy coming out of the pandemic. Just extraordinary here, and then that explains a lot of what we've been dealing with even today.
There's some great work out there this morning. We'll talk about Hugh von Steenis, who's got a great piece out on private credit, private equity. But in the FT, Ruchir Sharma, I put this out early morning when it was published. Ruchir Sharma of Rockefeller with a spectacular note on what Paul Sweeney was just talking about, which is this wall of stimulus that we're all living with. Another lift to the market off the carnage last week. Futures up 14, Dow Futures up 75. The VIX from a 19 down to 16.62. Two-year yield, 4.99%. On CarPlay, Apple CarPlay on YouTube, Bloomberg surveillance.
Coming up, we're going to check in with Jeffrey Yu. He's a senior EMEA strategist at BNY Mellon. Get his thoughts on rates, on this Federal Reserve. When are they going to cut? Are they going to cut in 2024?
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen as stocks continue yesterday's momentum. Right now we have NASDAQ futures up 0.3%, S&P futures up 0.2%. Dow futures, they're up 0.1%. The 2-year yield at 4.99%, up 2 basis points. The 10-year yield at 4.63%, up 2 basis points. To commodities, spot gold lower at $2,300 an ounce, and over to oil, Brent crude at $86 a barrel. More earnings coming in, so let's get right to it. Kimberly-Clark, they're up more than 3%. Reported net sale volume change for the first quarter beat estimates. You have JetBlue getting hit down 9%. Whoa. They said revenue for the quarter, well, it's going to fall more than expected. That's due to excess flying capacity in Latin America. And since we're talking airlines, want to mention Delta. They say they're actually raising workers' salaries by 5% across the board, increasing its minimum starting pay to $19 an hour. Shares right now, though, they're down about 0.5%. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. What a way to start strong here. Let me get the date calendar, the official surveillance date calendar up. Gennady Goldberg, Sartoris, Jeff Yu now, Stephen Stanley coming up, Terry White. I'm going to tear up Megan Robson. This is like too much. What we're doing today, folks, is trying to synthesize around earnings. Listen to Carol and Tim this afternoon on the Tesla earnings. But we're trying to frame out the rate structure around all these other distractions that we have. With an international bias, Jeffrey Yu joins us now, senior strategist, BNY Mellon. Jeff, I got to go to my litmus paper here, which is when yen gives way. And I know, institutions there could make a splash to give a strong yen, but I don't see that on the screen, Jeff Yu. I got euro yen 165.16. How does yen weakness fold into inflation persistence worldwide?
Well, it's more of a disinflation persistence coming from Asia when we talk about yen. And the fact is, what the BOJ is doing right now is pretty much holding back the rest of APAC, So we'll be frank, the Korean won, for example, it's been one of our more favored currencies. We think it's cheap, from a valuations point of view. But recently, central bank has now stated, that they're comfortable with a weaker currency, even if there are inflation issues. And the fact is, if I look at the currencies of Taiwan, of China, and Korea, they can't compete with the yen, so they're not going to get into that game.
And I got dollar won, Korean won, well out over 2 standard deviations of weakness. Is the Fed going to take the same approach where they say, we're just going to stand pat and put up with this new resistance, this new stronger dollar and new higher yield structure?
Well, the Fed is in the more comfortable position of not needing to care too much about the rest of the world. So that's another point of exorbitant privilege when it comes to the dollar, because the US, it's more of an internally driven economy, especially in terms of domestic consumption. So what happens elsewhere doesn't really matter much. There's very little pass through from a stronger dollar in that sense. So they'll set policy according to domestic conditions, of course.
Jeffrey, can you give us your thoughts on Japan? Because Tom and I, this used to be something that we talked about a lot very, very early in our careers, and not so much for the last 20 or 30 years. Why are people caring about Japan these days?
I think there are two main reasons. Firstly, so is there a re-rating case for Japan as a whole, the economy? So, are things actually looking at, can Japan be an engine of growth for the world economy, through innovation and through some corporates? I don't think we've had that conversation for a good 15 to 20 years on the first side of it. But secondly, of course, how does it play into the global policy narrative? And I am a bit surprised as well, compared to, say, 20 years ago, there's actually a bit less talk, at least from Asian peers, Asian central bankers, about a weekend. It just shows economic structures have changed. Maybe, China's got its own approach, but valuations are concerned. Just listen to what the head of Keidanren, the Japanese Enterprise Federation, said today. The weak yen is becoming an issue, and they'll have to acknowledge that, especially if it results in higher inflation.
All right, Jeffrey, so here back in the U.S., we've got a Federal Reserve that appears to be kind of comfortable sitting on its hands, at least for the next meeting or two. What should we expect from the Bank of England. What should we expect from the European Central Bank?
So in the following order, it's probably the European Central Bank cuts first, and then the Bank of England, and then the Fed. So June, August, and September, respectively. You know, that's our view right now. We've just had Chief Economist Hugh Pill from the BOE saying that the first cut is a long way off. So, you know, if anything, that the Bank of England or the UK economy, wouldn't say it's firing on all cylinders, but probably not as bad as expected. And I think demand strength is robust. Eurozone, however, I think market's missing the woods for the trees. You know, right now. So yes, services expanding, but it's manufacturing. Right. Look at what the PMI report said about manufacturing, extremely weak and weakening. So why is Euro not reacting to that? There's a mispricing.
To bring it back domestically, Jeff, and we're seeing this with earnings, where maybe we've got a better organic revenue growth, we got a better fixed nominal GDP. Is the way the Fed react is to elevate R-star, to elevate their interest rate guesstimate out? Because with stimulus, as Ruchir Sharma talks about in the FT this morning, with stimulus, we have a new reset on nominal GDP.
So we'll just slightly adjust that phrase from nominal GDP to potential GDP, right? So if you actually do have, right? So if you do have stimulus that generates productivity growth, we look at what drives growth, demographics, productivity, and on the demographic side, the US certainly ahead of the world's major economies, and on the productivity side, and this is a big if, the fiscal stimulus does quote unquote stop in the private sector to drive productivity, and the US is much better at doing this compared to Europe, then it is going to be a positive. However, if it's inefficient, then it's a different story, and that's stagflation.
I'm going to give you all Peter Orszag here. What's your glide path on the diminution of stimulus effect?
Well, ultimately, I think that's up to the bond market to decide, and especially the international investor. One thing that we have noticed at the beginning of the year was that international cross-border investors, based on our custodial data called iFlow, that they've sort of slowed down their purchases of US debt. But recently, perhaps due to risk aversion and, frankly, higher yields, they're stepping back into the market. So as much as Mr. Orszag would want to, and former CBO colleagues, would want to criticize the trajectory of fiscal in the US, I think international investors, they're still willing to participate.
Jeffrey, as senior EMEA market strategist, what's some of the more interesting calls you're having with your clients these days about opportunities in these markets?
So we are actually looking at frontier, quite a bit, because we have a unique insight into flows. If you ask me, what are the best performing bond markets over the last quarter in Q1? I'll give you two: Egypt, Nigeria. Very high real rates, reforms, coming through. So there's a lot of interest there, and perhaps it's a place that asset allocation hasn't really touched. Where are clients under position and wanting to get back in, but not daring to? Again, going back to the APAC region, apart from Indonesia rupiah, which is also struggling a bit, our clients are short almost every single APAC currency at this point.
Are you long Pacific Rim, so you can tell us there's going to be a demand kick in to hydrocarbons and particularly Brent crude?
The Pacific Rim right now, you need the yields to back it up. And so, again, held down by the BOJ perhaps, and also the PBOC, given they need to stimulate the Chinese economy. The yields are just not there. If the US 10-year is back down to, say, 3.5 or 3, then perhaps, but that's not our base case right now. So you can't afford not to participate in the US. That's the bottom line.
Within Matrix, what's your yen call to provide for a Pacific Rim lift? Is it to get dollar-yen? Let's use dollar-yen here. Is it a modest move to 140, or is it something more dramatic down to 120, or dare I say parity?
No.
Right, so it would have to be, I wouldn't use the word dramatic because that implies a fast pace, and that's something the BOJ
but
don't
Jeff,
want to see either.
Jeff, it's showbiz. Bloomberg surveillance is showbiz. I need some drama, Jeff. What yen
20
catalyst?
20 to 30 big figures.
Yeah, 30 big figures. Okay, you're willing to go there?
Absolutely needs to go there from a valuations point of view, because when the yen gets fair value, then the rest of Asia can say, okay, we can adjust our own currencies back to fair value as well. But they are waiting for the MOF and the BOJ to start acknowledging that, and we need upside surprises, Japanese inflation to trigger it.
Ratings worldwide just went moonshot there because Jeff Yu's going 30 big figures.
Exactly.
Jeff Yu, you're just a trooper. Thank you so much with BNY Mellon. Can you see Jeff Yu at a bar with a martini?
Well, this is what we did. Next time we're over in London, Tom, at the Ned, we're going to get Jeff Yu over for a cocktail.
We should, for a beverage.
No question.
Our choice. Jeff Yu, thank you so much. Let me translate that. We got a little bit jargony there. Michael Barr sent me a note. He said, Tom, I don't have a clue what you guys were talking about. Yen is what Paul and I were weaned on, the collapse of the Japanese post-World War II experiment that galvanized everyone. And the fact is they're so messed up now, is all you need to know, that at some point they're going to capitulate. 30 big figures is dollar-yen from 150 yen down to 120 yen. The only word I can think of is seismic.
Right.
That would be a seismic move.
Yeah, exactly right. And I mean, I think again, you hear people like Warren Buffett, Tom, maybe 18 months ago talking about, I'm looking at Japan. I'm like, holy cow.
If you get a move 130 to 120 yen, you probably have 2 Japanese pitchers on the Detroit Tigers.
Exactly.
I mean, that's probably how that would work out. With our news in New York City, Michael Barr.
Tom, Paul, Lisa, thank you very much. It's day 2 of testimony in the so-called hush money trial for Donald Trump in Manhattan. Former National Enquirer publisher David Pecker, someone who once called Trump a personal friend, testified for the prosecution. This morning, Pecker returns to the witness stand where he already testified about the tabloid so-called catch and kill on stories. Prosecutors said it paid for stories it never printed to help protect Donald Trump during the 2016 campaign. It's the Senate's turn on foreign aid. Bloomberg's Amy Morris has a preview from our 99.1 newsroom in Washington.
Senators had planned to spend this week taking part in congressional delegations around the world or meeting with constituents back in their home states. Instead, they're back on Capitol Hill for the first votes on a $95 billion foreign aid package. They'll start with a key test vote, cloture, to limit debate before a final vote to pass the bill. Now, this bill includes nearly $61 billion in aid for Ukraine, more than $26 billion for Israel, and more than $8 billion for the Indo-Pacific. It also includes measures to seize Russian assets, require TikTok's Chinese owner to divest the app, and impose sanctions on Iran. The first votes are set to take place this afternoon. In Washington, Amy Morris, Bloomberg Radio.
President Biden is heading to Tampa today, where he is set to talk about reproductive freedom. The president is expected to address Florida's 6-week abortion ban that goes into effect May 1st. Meanwhile, Vice President Kamala Harris spoke at an event in La Crosse, Wisconsin, for reproductive freedoms.
More and more people will openly agree that one does not have to abandon their faith or deeply held beliefs to agree the government should not be telling her what to do with her body.
Without mentioning Donald Trump by name, Vice President Harris said he appointed Supreme Court justices with the intent of overturning Roe v. Wade. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul Sweeney, earnings center stage. I guess we got to go there. We got Tesla. Our headline, Tesla stock in no man's land.
Oh, boy.
After 43% rout ahead of earnings. But far more than that is just this stock, that stock. We look at, we're as guilty of this as anyone. We look at 6, 7, 8 stocks and think that's the whole world. And the answer is, it's important what they're doing. I mean, GE, what do you say about, I guess GE Aerospace is the proper name now?
Yeah, I mean, it's not the GE that you and I grew up with, Tom, in the 80s and 90s. This is a super trimmed down GE, focusing on a couple of businesses. But if you talk to the Karen Ubelharts of the world of Bloomberg Intelligence, she says they got a pretty good collection of assets now. Now they can actually put up some numbers.
I was with Karen. We're doing a road show. We're having a Whittaker club up in Schenectady by where they used to have their old factory, like Memories and all that. Jack Welch over in Pittsfield. She didn't tell me to buy at 40.
I know.
I believe the stock price. I mean, you talk about cocoa, GE. 40 to 150.
Exactly. I mean, the stock's up 5% today pre-market, up 48% year to date, up 90% over the trailing 12 months. Tom, this thing's got a market cap of $164 billion. It's a fraction of what it was back in the day when it was a big GE Financial and all that kind of stuff. But man, they've kind of found their way.
2 options for Lawrence Culp. Either run for president,
exactly,
or manage the Red Sox. I don't know which, but
exactly.
But one of the two.
He's got the golden touch here.
I tell you, folks, some of these industrial stories. Brooke Sutherland's brilliant.
Oh,
on
she's
this.
But
they're just amazing stories. Futures up 13. It is the earnings season.
headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are advancing. We have NASDAQ futures up 0.2%. Same for S&P futures. Dow futures up about 0.1%. The 2-year yield at 4.99%. That's up about 2 basis points. We have the 10-year yield at 4.64%, and that's up 2 basis points. Over to commodities. Spot gold lower at $2,302 an ounce, and Brent crude at $86 a barrel. Companies making news. We'll start with Apple. They're down 0.3%. iPhone sales in China fell 19% in the March quarter. That's according to Counterpoint Research. It's Apple's worst performance there since 2020. Now, Meta, they're up more than 1%, is actually opening up its Meta Quest headset operating system to other hardware makers. Now, that basically means that other technology companies are able to build their own headsets using Meta's operating system. That's from Bloomberg. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Let's get out front of earnings here. Let's get out past May 2nd, Apple and the whole technology orgy and all that. Let's get to Paul Sweeney's world. May 9, Warner Brothers Discovery.
Oh, boy.
Are they just saying, like, can we just pass the conference call?
Yes, can we pass?
Can we just not do
Here
a
are
conference call this time?
Yeah, I'm looking at, this stock is, Tom, it's down 25% year to date, down almost 40% on a trailing 12-month basis. Investors just have no idea what to do with this company. And oh, by the way, they've got a lot of debt on their balance sheet. So there's concerns there from a credit perspective. They paid down a lot of debt, but they still got a lot more there. So tough situation.
It's going to be interesting to see. Let's get to the newspapers.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages around the world, our most popular segment. It's brought to you by Interactive Brokers. Interactive Brokers. They charge dollar margin loan rates from 5.83% to 6.83% rates. Subject to change. You'll learn more at ibkr.com/compare. That's ibkr.com/compare. Lisa Mateo.
All right. So we've been talking about all different things that New Yorkers that concern New Yorkers, right? We talked about congestion pricing, hot button issue. The other one, it's the one Michael Barr's been talking about. A lot of the protests going on over the Israel-Gaza war. They're starting to ramp up. You heard him talk about Columbia University. They canceled in-person classes. Police, they've arrested a dozen protesters at Yale, New York University. And the college leaders are in their spot. They're being called out for whether they're doing enough to protect students, faculty, staff. And at the same time, they're being criticized for denying students right to speak out. So they're in this weird position. Already, you had more than 100 demonstrators arrested at Columbia. Last night, more arrests at NYU. I mean, it's spreading to different universities. You have Boston University, University of North Carolina at Chapel Hill, MIT, the University of California at Berkeley. So this is a growing issue.
There's a lot of other schools. There's somebody out on Twitter was saying, yep, but then there's Chicago, or then there's Duke. Paul, you just visited Duke, and every school is dealing with this in an original way. I find that fascinating.
Yeah, I think most schools are just trying their best, I guess, to kind of protect free speech, of what they're certainly all about, while also, protecting their students. All I can say is that, boy, if I were paying $100,000 to Columbia to send my kid there, I'm not sure I'd want them in virtual classes. I don't know. That's a tough situation there.
Well, I'm not going to go there. It's not our job, my job, I should say, to comment on the micro policy of different school. I would say, Lisa, a few. It's like the Fed minutes. Several. Some of us, a few of us, have a nodding acquaintance with 1968. And then the tension was war, Vietnam War. And there was also a huge undercurrent of a racial tension as well. And to me, and I'm speaking strictly as an amateur, to me, there's a huge distinction between what we're seeing right now and what we lived in 1968. I happened to be in Paris in 1968 in that complete ferment as a child. And I really need to read on this from experts, including from Bloomberg Opinion, about the compare-contrast with 1968, because I don't really see it right now. I'd love to read more on that. What else do you have?
Sure. So before kids get to college, they have to get through elementary and middle school and high school. Schools are banning cell phones, but parents, they're kind of getting in the way of it. So this is the big battle. So moms and dads say they want the kids to keep the cell phone because they want them in case of emergency. Times are different now. I mean, kids are having, not shooting drills, in schools. But the teachers are saying that it's taking away from focus. It's taking away from their education time because that's part of their job now, to kind of monitor who kids are using these cell phones. So this is becoming the issue. There was a school district in Colorado tried to ban it. Parents got on the way, so they came up with a compromise where the kids could hold it. They do this at my daughter's school. They can hold the phone, but they can't take them out until like recess or lunch.
Okay.
But it's different in every school.
We got my kids in their mid to late 20s when they got to 6th grade. That was when we would consider it.
Yeah. Yes.
Okay. Can I do an addendum to this?
Yes.
Vince Farrell, one of the giants of equity analysis. We lost him way too young. I'm still in such sadness over the death of Vince Farrell. He and I sat in tears one day laughing in the room right next door where we invented this. And Vince Farrell and I were trying to outdo each other on when do you stop paying your kids' cell phone bills.
This is the
Come on, Lisa, when do you stop paying the kids' damn cell phone bill?
I don't know. Ask my 21-year-old.
9 years old or 12.
This is I've cut my kids. They're off.
They are off? I was going to ask.
Except for the phone. That's the last.
That's it. Good morning to the memory of Vince Farrell.
Exactly.
Vince Farrell went to his grave paying like 6 kids' cell phone bills.
Exactly.
What do you got, Lisa?
That's an issue. I'm telling my sister, I think it's when she got married, my parents finally cut her off of the family plan. All right, so we're going back to, this was a yesterday story. I want to point it out. How the FTC is suing to block that $8.5 billion union of Coach for Tapestry. So Tapestry is trying to take over Capri Holdings. $8.5 billion. So it's the first time the kind of Biden administration is stepping into for a deal in the fashion accessories industry. That's why it makes it interesting. But you have Tapestry, okay? They own Coach, Kate Spade, Stuart Weitzman.
Okay, so what?
Exactly. Who cares?
They have, Michael Kors, Versace, Jimmy Choo.
Oh, Jimmy Choo.
Okay.
Yes,
they have James Choo.
They do.
You notice they just moved their store. I saw you in there looking at the
quiet. You can't tell my secrets. But it's the problem that the enforcers are saying that it's going to deal to price rate. They're saying the prices are going to start to rise if these two companies merge. They're saying workers' wages are going to be affected because the companies compete, for competition for workers.
I tell you, this administration is tough on
getting tough.
M&A. If I'm an M&A lawyer, I'm like, I'm not sure I can advise you guys. Yeah. We can get anything done these days.
Next.
Yes, it's a tough one. All right, if you've been online, right, to go shopping or whatever you do, and sometimes that notice pops up like, okay, find out how many motorcycles or how many bridges.
Exactly.
They're called CAPTCHAs.
I failed those quite a lot.
That's the problem, okay? They're preventing bots from, disrupting websites, but a lot of people are saying that they're starting to get a little bit more difficult.
Yeah,
and they are because they're the people who make them. They're trying to have to go after these bad actors who are figuring out how to crack them. So now they're getting even tougher to do. So I know I failed.
Yes.
I failed the motorcycle one. I was like, wait, that's wait. It gets a little confusing. And so they're going to be, just the warning out there, they're going to be getting a little bit more difficult. So get your thinking caps on when you go shop online or shop anywhere else.
Yep.
They're going to start to get a little bit harsher.
Lisa Mateo, thank you so much. The newspapers today. Paul, the cell phone thing is hilarious.
Yeah.
I mean, and they make it so easy to combine phone bills.
Yeah, they do.
You can combine your phone bills with one cherub here.
Yeah.
Paris, no problem. You can combine your phone bill.
Yep.
How much did you call? Name the country.
Yeah.
I get emails. I get love notes from my phone provider saying, "Oh, by the way, about the 42 minutes of international phone calls. I mean, this happens. Futures up 11. Dow futures up 46.
I saw Verizon. They had some numbers out yesterday, some pretty strong numbers, and that was completely on my back. I mean, I feel like the money that I pay every month without fail, by the way. So
and the funny thing is when you get the calls like, oh, can we get more data? Can we get more of this? Can we get more of that? Really? Okay.
We're doing jazz today. Angie Gray out of Paris. It's a new album.
So I'm telling you, baby, I ain't no good for you. I want caviar for breakfast, champagne every night, a midnight snack for every man that I invite, 'cause I'm so evil. Yes, I am. Oh, I'm telling you, baby, don't you mess around with me.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Bloomberg Surveillance, Lisa Mateo, Michael Barr. Michael Barr rumored to drop by this morning.
Oh, nice. Okay.
A lot of news. Busy news day as well. We're having a really interesting set of conversations. Stephen Stanley to be with us here in a moment. What I like, Paul, about what we're doing today in the middle of the new advent of the earnings season is we're sort of triangulating our economics, our business world into what yield is telling us. Yield speaking volumes here.
Yield speaking volumes. We got the 10-year Treasury, Tom, up about 4 basis points here today, 4.64%. But the 2-year, that gets my attention. I'm going to call it 5%. I'm going to just round up and call it 5%.
Well, you can round it up right now to 4 digits. It's 5.00%. I'm going to talk to Steve Stanley. I'm going to lead off with this. The inflation-adjusted yield, the 10-year real yield, 2.24%. That is a change agent right now. So we'll get to that this morning. Say good morning to all of you out on Apple CarPlay, Android Play as well, the Bloomberg Business app. This is free. I want to make this clear. You don't have to pay to get pristine radio in your car. Apple CarPlay, can't say enough about it. On YouTube, good morning. It's building each and every day across the nation and worldwide. I'm fascinated where people are watching us on YouTube, like their living rooms or their cell phones, their iPads.
Everywhere.
Eating breakfast with a bagel stuck in their mouth. I don't know. But the answer is it's growing, and search Bloomberg Podcasts out on YouTube and look for Lisa Mateo. That's the easiest, the most lovely way to get to us. Bloomberg Surveillance this morning brought to you by Cohn Resnick Advisory Assurance Tax. Cohn Resnick can help your business quantify its financial exposure using risk-based strategies and analytics. Visit CohnResnick.com. We thank Cohn Resnick, CohnReznick, CohnResnick.com for their work. With our Bloomberg Business Flash, Lisa Mateo.
Good morning. Yeah, futures on the rise after yesterday's rebound on Wall Street. Right now, S&P NASDAQ futures up 0.2%, Dow futures up about 0.1%. The 2-year yield at 4.99%. That's up 2 basis points. The 10-year yield at 4.64%, and that's up 3 basis points. Earnings in the spotlight, and rightfully so. About 180 companies report this week. That's representing over 40% of the S&P market value. They're already pouring in, so let's get to PepsiCo. Again, shares little change. Sales beat expectations in the first quarter. That was thanks to strong growth outside of North America. You have UPS. They're up about 0.5%. Profit topped estimates, and that was really thanks to its headcount management and restructuring of its delivery routes. Lockheed Martin up more than 1%. First quarter operating income beat expectation. It delivered more fighter jets and missile systems. And yes, after the bell, we're over to Tesla. They're up 0.5% right now. It's expected to post a 40% operating profit decline and its first revenue decrease in 4 years. We shall see. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks. The VIX 16.65 right now. Nicely in from the Friday challenges of 19, I should say. If you have a tour of duty at the Federal Reserve Bank of Richmond, that means you have a certain caste. It's called fresh water or tidal economics. And it goes really interesting theories down there. The late Marvin Goodfriend was one of the academics that led so much of that. And you get to the Fed Richmond with all of its history, its heritage. You can do that out of Washington and Lee University, which is, it's a short drive. You get the carriage,
Lexington,
the 2-horse carriage, and you go up there. And of course, you do it with some hard-nosed University of Chicago economics. Stephen Stanley joins us now, right now with Santander. What was it like at the Richmond Fed? I've done so much work with them, including visiting and their history. They used to write the Edgeworth box, 42 pages on the Edgeworth box. What was it like walking in to the Federal Reserve Bank of Richmond out of Washington, Lee, and Chicago?
Well, first of all, I have to say I feel like I'm on This Is Your Life. This is a great trip down memory lane. But yeah, it was great. It was a fantastic place to start my career. Marvin was one of my mentors, and I learned so much. It was fantastic.
Is there underlying real economy theory valid, or is there something to these saltwater economics of the Charles River?
Well, I think so. Back in the day, going back decades, the Richmond Fed was definitely one of the monetarist banks, and that, of course, the theories there have evolved. But I certainly think that that the framework that I got has helped me a lot. So,
does the Fed have a framework now? If it's neo-monetarist, neo-Keynesian, neo-Stanley, I don't care. But all of our, Paul and I get mail on this Lisa gets mail on this. The bottom line is there a plan? Is there a framework?
Well, I think the closest thing they have to that would be the board staff and their models, which, broadly speaking, I would say are kind of, as you say, neo-Keynesian. I think the Phillips curve gets a lot of weight at the Fed, even though publicly the Fed will kind of distance itself from that. That has always been a lodestar for the Fed. But I think there's also a lot of pragmatism now, which, is good and bad. I think it's good that people are flexible, but at the same time, it sometimes does feel like there isn't really a strong framework from which through which to interpret the data.
So how do you think the Fed is interpreting that data these days? I mean, they say they're data dependent, and the data, particularly the inflation data, we'll obviously get the PCE on Friday, but it's kind of reared its head a little bit more over the last few months. Do you think it's enough for the Fed to just say, I think we're just going to sit on the sidelines and see what happens?
Well, here's how I would frame it up. So for about 18 months, roughly the end of last year, you heard Chairman Powell over and over again saying, we think we're going to need to see a period of subpar growth, some slackening in the labor market if we're going to get inflation where we want it, down to 2% on a sustainable basis. And then you had that period in the second half of last year when growth was really strong, but the inflation numbers were still coming down. And I think they got a little bit enamored by that. And all of a sudden, in January, you heard Powell essentially say, we think maybe we can have our cake and eat it too here. We think the economy can just rip along and inflation is magically going to make its way to 2%. And I think the data so far this year has been a bit of a slap in the face to that optimism.
Are you concerned that this economy, it seems like, again, I took a couple of business classes at University of Richmond. I feel like economics classes, I feel like I can state an opinion on economics. Is this soft landing? Have they landed this soft landing? Or do you think there's a risk that maybe it's going to be a little bit bumpier maybe?
Well, we've certainly made good progress on that front, but I don't think you can declare victory until inflation is actually back to 2%.
Now, what's the 2% number? When did that come about? I never heard about that until like a couple of years ago.
Yeah.
And then people started talking about what's wrong with 2.5 or 3%?
So, in theory, price stability you would think would mean zero inflation.
Okay.
But there are two issues. One is there's economists will tell you that the inflation data are biased. So the true price stability number is probably somewhere between 0.5% and 1%. Right. And secondly, and more importantly, I think the Fed has been spooked over the last several cycles by getting captured in the zero bound, and they want to stay away from that as much as they can. And so a little higher inflation takes them further away from the zero bound on average.
Our theme the last 2 days has been the stimulus. How does it unwind? Ruchir Sharma with a brilliant piece in the FT today, iconic at Morgan Stanley and his work at the Rockefeller Foundation. Now, and just wonderful trying to figure out this mystery of the glide path of what I'm going to invent this word this morning. You could steal it, Steve. This destimulus. What's your framework for how many quarters we need to migrate out to destimulate from the pandemic?
Yeah, well, I think for me, it's at this point, it's not as much the pandemic anymore in the sense that I think there's still a lot of fiscal stimulus in the system, but the bulk of it is not coming from the pandemic programs. It's coming from the things that were passed afterward, the infrastructure bill, the CHIPS Act.
Blanchard has talked about the 3 levels of stimulus.
Yep.
So what's your timeline on this?
Well, these programs that we just ticked off have multi-year spending paths. So I think it's a while. What I would really like to see is I'd like to see some fiscal discipline. We're running $2 trillion a year budget deficits.
There we go. There's the Richmond kicking in.
That's it.
We got to end the interview, but it's good. With the Federal Reserve Bank of Richmond, Stephen Stanley with us this morning. Also with the Spanish bank, Santander, leading their North American coverage. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Donald Trump returns to court today for his alleged hush money cover-up trial. A key prosecution witness continues testimony at the former president's Manhattan trial today, former National Enquirer publisher David Pecker. Prosecutors argue that in 2015, Pecker met with Trump and his former lawyer, Michael Cohen, to work out a scheme to buy and conceal negative stories about Trump ahead of the 2016 election. One of them about an alleged previous affair with adult film star Stormy Daniels. Also today, a hearing has been scheduled with prosecutors saying the former president is in contempt for violating a gag order. TikTok is gearing up to fight any U.S. ban or order to divest. Bloomberg's Ed Baxter has the story.
TikTok says it will move to the courts for a legal challenge. It sets up a watershed battle that could set a path for Chinese business in the U.S. 4 years ago, when the Trump administration threatened a ban, ByteDance worked out a preliminary deal to sell. It will not happen this time. Its sizzling growth makes it hard to part ways. China's seen moves on Huawei and is afraid it won't end with TikTok. It feels it may be able to leverage support from users, up to 170 million now. Ed Baxter, Bloomberg Radio.
And finally, following up on the story we talked about yesterday, Transportation Secretary Pete Buttigieg was on the scene to celebrate the start of a passenger bullet train linking Las Vegas and Los Angeles. He called yesterday's celebration perfect timing as it coincided with Earth Day.
There'll be a million fewer cars stuck in traffic, so even if you don't use it, you'll be benefiting from the people who do.
On completion, the Brightline-owned train and track will be the nation's first true high-speed rail line. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
We do it all. I mean, one of the first international things I got, Paul Sweeney, was I did cricket with John writing.
Really?
And I got people from Perth, Australia writing me. I'm like, well, this works. Can we go more obscure right now?
Yeah.
Number one men's lacrosse, Duke.
Yeah.
And this comes off Duke UVA.
Yeah.
Which is, and Johns Hopkins showing some
They're big there.
life here. I got the NCAA rankings there. Duke, Notre Dame, Johns Hopkins, Denver.
Yep.
Denver's in the Big East. I don't understand that. Syracuse, UVA. Now, I expect at 10 o'clock this morning, Paul Sweeney, Emily Graffeo.
Oh, we're going to go
We got to
at it.
have some men's lax discussion.
Yep.
Women's too.
Yeah, she's a big Wahoo fan, UVA. But yeah, I mean, lacrosse has gotten so incredibly popular that schools all across the country, it used to be Syracuse and Johns Hopkins, and that was pretty much it. Now it's like everybody.
There were like three high schools in Long Island.
Yeah,
and out of Baltimore.
Exactly right.
And Lawrenceville had like three thugs.
Yeah,
there were two teams.
When I played at Lawrenceville, we had to go out to Long Island for a weekend just to get 3 games in because nobody else played it. And Montclair played it. We played Montclair. We played Summit. And that was it. And then we'd have to go down to Baltimore and play schools down there. So, but now every town has it, and it's awesome.
There's a lot of distractions today. Tesla earnings.
Yep.
Forget about that. 10 a.m. Emily Graffeo, Paul Sweeney, lax on Bloomberg Radio, on Apple CarPlay and YouTube as well. Where else can you get a discussion on NCAA lacrosse? Futures up 7. Dow Futures up 39 right now. It's a better tape. It's fading away a little bit from the enthusiasm of an hour and a half ago. This is Bloomberg's Surveillance.
It's headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are advancing, and this is after stocks rebounded in Monday trading. Right now we have NASDAQ futures. They're a little change, same for Dow futures and for S&P futures. Over to the 2-year yield, 4.99%. That's up 2 basis points. The 10-year yield at 4.65%, and that's up 4 basis points. To commodities we'll go. Spot gold lower at $2,305 an ounce. And over to oil, we have Brent crude at $86 a barrel, NYMEX crude at $81 a barrel. On the economic calendar for today, we have new home sales for March, but all eyes, yes, on corporate America. We have earnings and more to get to. General Motors, they're up 4% right now, expects better profit this year after a strong first quarter. They had strong truck sales in the U.S. that actually helped it to raise its 2024 guidance by $500 million. General Electric, they're up more than 4%, raised a full-year profit guidance for its aerospace business, and that was driven by an increase in revenue from commercial aircraft engines and services. And finally, Spotify, up 7%, reported first quarter results in line with forecasts. Paid subscribers, they rose 14% year over year, and total revenue, that also grew. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. A little obscure data check, which you can do from the Bloomberg Professional Service. Euro yen out, weaker yen through 165. 165.20 is a big deal. I can't fathom, Paul, 166, 167 on euro yen. I don't know what that does. We had a 34-year weakness in yen yesterday. Really? Part of the ballet. Peso was 16 level, now 17.14 Mexican peso. Renminbi critically through 7.24, rounded up. 7.25 again as a managed weakness in the yuan. Brent 86.30 on oil. Quiescent gold, not hammered. That's too much of a talk, but from the 2,400 level down to 23.20. And of course, the equity market's steeled for Tesla and earnings and the rest. We had Jeff Yu in earlier with BNY Mellon.
Yep.
And now, and what we're going to do here, folks, is there's usual blah, blah, blah about like where are we and what's housing inflation going to do and maybe what the international thing is. And then there's a memo that just stops you in your tracks. Thierry Wizman with us right now to say he's had a global currencies interest rate strategist at Macquarie barely describes decades of experience back to Fortress Schwartz at Bear Stearns a few years ago. I was stopped and I was thinking of David Folkerts-Landau of Deutsche Bank the day after Putin invaded Ukraine. And here you are with a definitive piercing note. Let's repeat what we've already said. Wars are inflationary. Are we missing the forest from somewhere out there, the trees? Is all of this inflation we're talking about, maybe we had a war and a pandemic, but these wars are inflationary, full stop.
Yeah, this shouldn't be a mystery to most people, Tom. I think if you look at the history of inflations in the U.S. and where we've had big spikes, it was during Korea, right? We had a demobilization after World War II, and inflation fell. But when Korea started, we had a big inflation in the U.S. And then we had an inflation again in the intensification of the Vietnam War in the late 60s. And then we had an inflation again in 1973, which coincided with the Arab-Israeli War of the time. And we had an inflation again with the first Gulf War, right? And we had an inflation again with Russia and Ukraine. I mean, this optically, you look at these charts and you look at what coincides with these wars. It is these spikes in inflation. You have to conclude that there's something to do with the idea that wars cause inflation. I think you can talk about what the channels are, but supply side disruptions.
Right. So I mean,
are an important aspect of that.
I mean, I'm just looking at WTI crude oil, or actually Brent crude. We're down to 86. We were up to close over 90 here. So how do you factor that in? What's happening in Ukraine? What's happening in the Middle East? We passed another bill to fund some issues in Taiwan. How does that factor into your research and kind of how you view kind of rates, how you view currencies?
Yeah, let me say that a lot of economists tend to discount the importance of oil prices in the overall inflation picture and in respect to the Fed's policy outlook. And the reason for that is also simple. It's not part of core inflation. We like to think of energy and the energy complex as sitting outside of core. And we like to think that when oil prices go up, it's going to be temporary, in part because it is a supply side shock that drives these prices from time to time. I tend to fight against that view. And here's the reason. If you are a labor union and you're sitting in front of your employer and you're demanding higher wages, you're not going to say, I don't eat food and I don't consume energy. You're going to say, I want my wage increase based on the basket that I consume. And that basket, very much for the average worker in the United States, is energy intensive and is food intensive. So even though core may be a better reflection of underlying inflation, when headline goes up, you have to imagine that workers are going to pressure their employers for higher wages. And to the extent that wages cause inflation, that in itself becomes inflationary.
The heritage of what you're hearing there, folks, this is critical, the path here. There was a guy named Lawrence Kudlow a million years ago, before he was a ginormous TV star. I love busting Larry's chops. And he held court at Bear Stearns, and people threw apples and rocks at him because he was working in the nominal space. And then Malpass, in writing, in Wizman, they were working in the nominal. They had respect for the nominal space besides the convenience and crutch of real. Right now, do we underemphasize the nominal space and the persistency of a higher nominal GDP?
No, I actually don't think we do. To the extent that we are, that the world central banks are inflation targeters, it implies that they are very much looking at the nominal space. Now, if nominal GDP were to rally a lot and real GDP were not to rally a lot, you'd effectively have what is called an inflation problem, presumably driven by a supply side shock. You could make a case that the central banks should not respond to a supply side driven increase in inflation to the same extent that they would a real positive demand shock increase that causes inflation. But that's exactly the point that I was trying to contest earlier. And the reason is because inflation expectations matter. At least the conventional wisdom is that they do.
What do they
and certainly
tell you
central banks believe that they do.
What does inflation expectations, the synthesis of that, tell you right now?
That they're not high enough to cause panic at the Fed, but there is this risk that if oil prices stay high indefinitely because of these issues regarding supply side shocks, the war, climate change, demography, etc., even deglobalization, that they may at some point start to drift higher.
I could be a currency trader. I'm just long the dollar. Give me a bear case for the dollar. I mean, I could do this for a living.
So the bear case for the dollar, if there's a structural one, is that the dollar will no longer be, at some point, and no one knows when, the world's reserve currency. Now, we are already seeing signs that this is manifest. We see, of course, we see China accumulating gold. Well, that's telling you that they may not like the dollar anymore. We certainly see the Russians moving away from dollar reserves. We've seen the Venezuelans do that. Now, the bull case for the dollar as well, you can dismiss these countries because they're part of this, I don't want to say axis of evil, obviously, but they're not on the same side of the fence as the U.S. But to the extent that we get a bipolarity in this world, and we really get a new Berlin Wall that goes up between the West and the rest, you have to imagine that that's going to be bad for the dollar, because the dollar has benefited in this era of globalization. Anything that tends to reduce the amount of globalization tends to be bad for the dollar, and that new Berlin Wall would be bad for the dollar.
What are we going to see in GDP here in a couple days? Does Macquarie have a view on U.S. GDP?
Yeah, it's going to stay robust. Do we have a pinpoint view on quarter one's? Yeah, on quarter one's results, I think we're at about 2.5%, if not mistaken, 2.4, 2.5 annualized.
But robust.
Yeah, and that's very close to consensus. If you look at some of these GDP Now estimates that come out of some of the reserve banks and the Fed, they're a little bit higher. And again, if it is going to be strong, it's going to be driven by consumption.
This was fabulous. Terry Wizman, thank you so much, and congratulations on a really thought-provoking note in your team on, it's just blunt, folks, wars lead to inflation. We've had a few centuries to really study that, to say the least. Dr. Wizman with Macquarie Securities. We didn't get to the Australian dollar. I failed there.
No.
We'll do it next time.
Macquarie.
Futures up 9, Dow futures up 46. The VIX, far more constructive than Thursday, Friday from a 19 level. to 16.67. Paul Sweeney make a note of where are we on the 2-year yield? 4.99%.
Yeah.
I'm with you. Round it up to 5.
Why not? Yep.
30-year mortgage out to 7.49%. How about that housing market? Please stay with us, and I really want to emphasize this afternoon, Carol Masser, Tim Stevanovic, they'll give you the Tesla earnings. It's Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen, but little movement. We have S&P, NASDAQ futures up about 0.2%, Dow futures up 0.1%. The 2-year yield at 4.99%, up 2 basis points. The 10-year yield at 4.64%, and that's up 3 basis points. To commodities we go. Spot gold lower at $2,308 an ounce. Brent crude, $86 a barrel. NYMEX crude at $81 a barrel. To earnings we go. It's a big week for it. We'll start with JetBlue. They're down 10%. 7%. Said revenue this quarter will fall more than expected due to excess flying capacity in Latin America. Kimberly-Clark, they're up 5%. Reported organic sales. Adjusted EPS for the first quarter topped estimates. Management also boosted annual forecasts on top of that. And then finally, you have Swiss drug maker Novartis. ADR's up 5%. It raises forecast sales of medicines for heart disease, psoriasis. Well, that outpaced expectations. That also gave the stock its biggest boost in 9 months. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Philadelphia Fed, non-manufacturing. It's still a negative statistic, improved from negative 18 to negative 12. But, it's just another way to the tape. Important data at 9:45. Paul Sweeney with new home sales with Emily Grafeo. Look for that at 10 o'clock as well. Our economic indicators, always brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth. Go where you grow. Visit commonwealth.com to learn more. We thank them for their support here of all of our economic analysis. Tomorrow, durable goods. What's today? What, the 25th is Friday? Am I right on that?
I think the 26th is right.
Thursday.
Yeah.
Thursday, we get the GDP numbers hugely anticipated. 2.5% is a working guesstimate there for a first look of first quarter GDP. It's exhausting, the quality of the guests today.
I know. They just
I don't know what to
after
do
another after another.
Bob and Eric and the team, they're making us work way too hard. Why don't you bring in Megan here?
I know.
From BNP Paribas. We really like yield. What does it say about everything else we're doing?
Tom, you go to the INGO function on the Bloomberg terminal. That gets the Bloomberg Index browser for all the kind of fixed income stuff. There's a lot of red on that screen. The year to date, there's just no performance, with a slight exception of U.S. corporate high yield eking out a 11 basis point gain. Megan Robson joins us, head of U.S. credit strategy at a little French bank called BNP Paribas. Megan, thanks so much for joining us here. I mean, how do we make money in fixed income, in credit, in 2024?
Hey, Paul and Tom. Well, first of all, thank you for having me. So I think, as you mentioned, the story in credit, we have seen spreads tighten and continue to tighten to historically very snug levels. And so from here, I think the argument for credit is a carry one. It's an income one. You want to be in credit to earn yield. Yields are still at historically high levels. And so our main recommendation is to earn carry through some of the lower volatility parts of the market. So,
Megan, do I stay in investment grade? Or do I maybe venture out a little bit into the high yield space? Again, if I look back to performance in 2023, high yield was the place to be. And that kind of surprised me, given all the talk about pending recessions and all that kind of stuff.
Yeah, so I think that there's opportunities both in investment grade and in leveraged credit. So within investment grade, we really like the 3 to 7 year part of the curve. We also like taking risk into triple Bs, so the lowest credit rating within investment grade. We have a thesis of a credit soft landing, and we think that area of the market, you're getting a pickup in spread and should still perform well this year. Over in the high yield market, we think you need to be more selective. So between leveraged credit, we actually like leveraged loans right now, double B leveraged loans, which offer a pickup relative to high yield, both on spread and on yield. And so within the lev fin space, we're overweight the loan market right now.
Megan, last week somebody had a great chart out on yield to worst. Folks, this is one of the best Bloomberg series. It's the aggregate yield to worst series, and it goes back before Volcker. And the answer, Megan, is we're out 3 standard deviations. We've seen a massive ballooning yields up to an aggregate yield to worst of 5.25% worldwide. Have we reached escape velocity off of the Volcker disinflation that we've seen? Are we in a new regime?
So I think that we are in an elevated yield regime. So for example, our rate strategists are calling for higher long end yields. So we're thinking of a midpoint around 4.5% on the 10-year, and compared to historical cycles, we see less room for long end yields to rally if we do slow down, given a lot of the structural issues at play, fiscal deficits, and further Treasury issuance. So I do think that higher yields are here to stay for some time in this cycle.
I mean, Paul, this is a huge deal. I mean, you think about young people. I mean, Lisa Mateo, 38, 39. She's never witnessed early Volcker or post or pre-Volcker yields. I mean, for how many people out there, look at the yield structure and they don't understand the shift we've seen in the last couple of years?
We have. I mean, thank you, the Federal Reserve. Megan, are there certain sectors within investment grade, within maybe the leverage loan space that you guys favor right now?
Yeah, so I think in investment grade, the story has been this huge supply in first quarter. So we've seen record issuance in first quarter in investment grade. We think that's going to slow. And how that relates to sectors is there's certain sectors that are much more ahead of our expectations in terms of supply. So there's 6 or 7 sectors that are already 50% of the way through the supply we're forecasting for the year. One of those is investment grade healthcare. So we're over 80% of the way through hospital and pharmaceutical supply. So that's one factor in terms of the technicals that should support in the investment grade space. I think in leveraged loans, I think it's very idiosyncratic. So we don't have a full-fledged overweight there, but we do like the names that have better interest coverage, as the loan market is more vulnerable to higher rates. That's really a bare minimum when selecting in that area.
No, go ahead, Paul.
So Megan, just with higher rates on the leveraged loan market, how are those companies doing in meeting their interest in just the overall debt service, given that rates are so much higher than they were just a couple of years ago?
Yeah, you raise a great point, Paul. So we have seen interest costs and interest expense roughly double for those leveraged loan issuers. The part of the market we like to be in is the BB, so the highest quality within loans. There you still have 2 to 3 times interest coverage buffer. You also tend to be larger public issuers with larger capital structures. Right. The place where we're more cautious, to your point, is sort of the B3 CCC loans. A lot of those issuers are hovering around this 1 times interest coverage, and if we don't see rate cuts later this year, if rate cuts are further pushed out, I think that's the place where we're very worried about.
An uninformed question: what would you suggest big tech, ginormous cash, next to no debt? What do they actually do in the next 12 months? Do they issue debt finally? Do they capitulate and act like normal companies?
So tech is one of the sectors that is running a bit behind in our sector forecast. So we are expecting tech and telecom to come to the market in May in investment grade. I think another potential use of cash could be M&A. I think that will be a wild card for the rest of the year if our issuance forecast is
so
low.
Megan, I don't mean to interrupt, but this is too important. Are you suggesting Apple will buy Disney?
Not suggesting that, but I think that there are, with cash on the balance sheet, there are opportunities to fuel growth through M&A. So I think it's something that could be a theme later this year.
That's a little surveillance humor there, Megan, as well. Megan, I mean, come on. These companies, they can do billions of issuance, can't they?
I think there's the capacity to add more issuance, but Tom, the major issue here is that yields are still high, borrowing costs are still high, so it's a big step up in their overall cost of capital to borrow. And so we've actually seen the trend of deleveraging this year, where between your cost of equity and your cost of debt, it's just not attractive to arrange your capital structure in a way towards more debt.
See, they're predicting like, an Ian Lincoln market where the yield's going to roar down. Megan, this was hugely valuable. Thank you so much. Megan Robson there, looking at the entire gamut of credit, not just focused on full faith and credit or focused on this, but a very broad view. Megan Robson with us with BNP Paribas. Now we go back up. Futures up 17. It's like a yo-yo here.
Yeah.
I mean, I don't know what to make of it. What do you think, Paul?
No, I mean, we got a little bit of stability here. The S&P up 0.3%. Same for the NASDAQ. So we'll see how we open here. Yields just a smidge higher, Tom. The 10-year Treasury, about 4.63%.
Gold down $20, 23.27. With our news in New York City, Michael Barr.
Tom, Paul, Lisa, thank you very much. A key prosecution witness, former National Enquirer publisher David Pecker, continues testimony at former President Donald Trump's Manhattan trial today. Pecker is expected to get into details of the alleged hush money payments to Stormy Daniels that were designed to influence the outcome of the election. Before that, a hearing whether Trump should face sanctions for alleged violations of the judge's gag order would take place. While former President Trump is in a Manhattan courtroom, President Biden will be in Trump's home state of Florida, putting a spotlight on abortion rights. Bloomberg's Jody Snyder has more from Washington.
He's going to put a spotlight on one of the country's most restrictive abortion laws, which is in Florida. And so while Donald Trump is in court in New York, Joe Biden is going to be assailing the 6-week abortion ban set to take effect in Florida, Trump's home state.
Bloomberg's Jody Snyder in the nation's capital. Police arrested dozens of students at Yale and New York University as tensions over Israel's war with Hamas continue to grow on U.S. college campuses. The moves at the Ivy League schools came hours before last evening's start of the Jewish holiday of Passover. Columbia University went to hybrid learning and will take place through the rest of the semester. New York Governor Kathy Hochul says she met with the president of Columbia University and NYPD officials to discuss public safety initiatives as student protests continue on the New York City campus. Governor Hochul said protests have reached a point where students are afraid to walk on campus.
People need to find their humanity, have the conversations, talk to each other, understand different points of view, because that's what college students should be doing.
NYPD Deputy Commissioner of Operations, Kaz Daughtry.
We haven't received any reports of any physical harm against any student. However, if there's any student, Jewish or whoever, that's been assaulted or wants to make a police report or wants to talk to the police, we encourage them to call 911.
A New Haven, Connecticut police spokesperson said about 45 protesters were arrested at Yale yesterday and charged with misdemeanor trespassing. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. The essay of the week out of Bloomberg Intelligence, without question, we're going to have to protect the copyright here. Look for it on the Bloomberg terminal. Jillian Wolfe in one GM Adams with a blistering note on tech and the linkage to rate dynamics. The summary: tech's relationship with yields is as clear as mud. And I can't say enough about the importance of this research note out of Bloomberg Intelligence, this certitude of looking at tech dynamics off of what yields do, and a duration study, a maturity study, because they're long duration and all the rest of this. I just think it's way overdone versus just the ability to do revenue growth and create free cash flow.
Yeah, and that's what they've done. And I mean, basically, Gina Martin Adams and her team are saying tech is not as vulnerable to higher for longer rates as you think. And that goes to something you've been talking about, Tom, for a long time, is the ability of some of these big tech companies to generate top line growth and then with their operating leverage drive that down to free cash flow growth too. And that's been kind of the story here. But again, we've seen historically, the NASDAQ move, much more than say the S&P with interest rates.
We'll have our people talk to Gina Martin Adams people and see if we can get her on. I think it's like a 3-year wait to get, to talk to her, a 3-month wait, I should say. To talk to her. Bloomberg Intelligence, incredibly important technology paper. I'll give you some of the highlights of that out on social, Twitter and LinkedIn. From New York City, this is Bloomberg Surveillance.
headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Lisa Mateo. Futures right now, well, we got green on the screen after yesterday's rebound on Wall Street. We have NASDAQ futures up 0.3%, Dow and S&P futures up 0.2%. To the bond market, the 2-year yield at 4.99%, up 2 basis points. The 10-year yield at 4.64%, up 3 basis points. Over to commodities, spot gold lower at $2,310 an ounce. We have Brent crude at $86 a barrel, NYMEX crude $81 a barrel. Companies making news, we'll start with Apple. They're down 0.3%. iPhone sales in China fell 19% in the March quarter. That's according to Counterpoint Research. It's Apple's worst performance there since 2020. And we have Meta. Their shares up more than 1%. It's actually opening up its MetaQuest headset operating system to other hardware makers. And that basically means other technology companies will be able to build their own headsets using Meta's operating system. And we talked about it in our newspaper segment earlier, but wanted to check in with shares of Capri Holdings, down 2%. That's after the FTC sued to stop Tapestry's takeover of the company. Tapestry is down 1%. That is your Bloomberg Business Flash. Tom and Paul.
What does Capri Holdings do? Do they make Capri pants? I mean,
no. It's in fashion.
It's like an Audrey Hepburn thing?
No. Both of the companies you have between Jimmy Choo's and Coach and Kate Spade and all the high-end companies. Yeah,
I don't get it.
Between the both of them.
Who cares if they merge?
Okay, well, we'll have to see here. Futures up 16, churning, I'm going to call it, with a nice lift. Bloomberg surveillance this morning, it's brought to you by IBKR. Financial advisors switched to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interests. At ibkr.com/RIA. You know, if you're a senior consultant at Deloitte, that gives you a twisted perspective.
It does.
I mean, it's not like,
explains a lot.
The CFA combine. It's not like, you come out of King's College, you get some parchment, modern history in Oxford. That sets you up for the streaming wars. Why don't you bring in our next victim?
I tell you, one of the top media analysts in the city of London, covering all the European media sector for many years, is Ian Whittaker, managing director and owner of Liberty Sky Advisors. He's based in London, joining us here in New York City, doing a little tour here in the U.S. Ian, thanks so much for coming into our studio. We appreciate it. We have some really good numbers that blew Tom Keene and I away from Netflix. I mean, is this streaming business, Netflix can certainly make a lot of money. How about the other media companies, the Disneys, the Paramounts, the Tom's favorite, Warner Brothers Discovery? What's happening in the streaming business?
So thanks very much, Tom, Paul, for having me. Thanks very much, Tom, as well. I think if you look at streaming, if you look at a long-term view, it's absolutely right. Netflix's numbers on a Q1 basis, absolutely fantastic. Really hard to disagree with anything they did. I think if you actually look at sort of some of the underlying things sort of within there and some of the details and some things they didn't mention, big question marks. You take away, as has been mentioned, information on subscriber growth from 2025 onwards.
True.
What does that say? Games. That had been talked about as a big strategy sort of for them to grow revenues. Nothing on the call whatsoever in terms of that. And the games industry is quite tough at the moment. Sports, you listen to what they're saying at the moment, definitely sounds as though there's a shift in terms of their strategy in sports, but they're going to have to spend big if they're going to do this. So there's a range of different questions, I think. The fundamental issue for the streaming business is this. What the big media companies have done, I think they replaced a model that worked extremely well for them for a number of years, and they sort of jumped into streaming into a business model that, quite frankly, is not not great longer term. And I think we'll look back in probably 5 to 10 years' time and we'll say this will be one of those business case studies where people would say, why didn't the major media companies, the Disneys, the Warners, etc., take a little bit more time before they jumped on the streaming bandwagon? Because if you look at it, streaming penetration is flatlining in many countries. I think fundamental mistake that the streaming executives made, particularly big media companies, was to treat the rest of the world as though it was the US in terms of the same dynamics. Absolutely not the case whatsoever, even in a market like Europe, which is quite similar, and so forth. And now you see all of them, what are they focusing on? Trying to reduce losses. Okay, well, that's great, but that's not a growth strategy. moving forward. So I think, yeah, if I look on a longer term basis, sure, there's a little bit of confidence for streaming, but longer term, I think the dynamic's still difficult.
So you look at a company like Paramount, for example, which back in the day, you and I recall when Paramount was a /Viacom/CBS was a great company, was a blue chip media company. They can't give themselves away these days. I mean, what happens to a company like a Paramount as they try to navigate to this streaming world?
Well, I think, again, it sort of comes back to this point that for many of these companies, what they did was rush in. What they didn't think about was what exactly was the long game here. The smartest one, and this is not, this is something that's been said by others as well, but the smartest sort of company on the entertainment space was Sony. Because what it said was, you know what, we cannot compete in terms of being a mass market streaming player.
Right.
It actually makes sense for us to sell our content to other players. The arms dealer analogy that has been used multiple times as well. You look at someone like a Paramount, that's exactly what the strategy for somebody like a Paramount should be. Free cash flow generation is not that great. Sorry.
So, well, sell the book. I get it. Sell the catalog. I get it. But to me, there's a fundamental issue in the train wreck of Paul Sweeney's world, and that is the intangible assets and badwill on the balance sheets. These numbers are, in my amateur opinion, ginormous. Is the shock that's coming that they're going to have to adjust intangibles down?
Yeah, I mean, that's a great question, and the answer is probably yes. The point being, I think if you were to ask all these streaming executives, all the top CEOs of these companies, the honest truth about where they think the streaming business would go, I think they fundamentally recognize that essentially the end game is not looking good. The problem becomes for many of them, in terms of their reputation, they've gone to the market and sold this sort of story for years. And I think many of them will find it very difficult to actually step out of that. That's going to be really the big issue. I think what will happen is that you'll get a continuation of the story, people saying, look, there's growth coming over the next 3 to 5 years. But at some point, these companies are going to have to bite the bullet.
Now, are you in New York on your way to LA to help close the Paramount deal? Can we make some news today?
I'm always available for. Quite happy to go there. Yeah.
Talk to us about the global advertising business. I know you have a lot of experience with the big ad agencies in London, in New York here. Is the money still going to broadcast and cable television, or is it just going to the Metas of the world and the Googles of the world?
Yeah, I mean, it's a really interesting dynamics that you've got with advertising at the moment. So if you take the advertising industry generally in terms of ad spend, what we'd say is that you've seen the advertising market perform much better than expected over the past couple of years. And I think what you've had here is a vast and planned experiment over the past 2 years where companies were able to put up their prices much more aggressively to consumers than they thought. And if you listen to the conference calls from those companies, they will say probably the key reason they were able to do that was the strength of the brand. And so I think fundamentally there is a sort of realization that advertising works. Then the question mark becomes, where exactly is that money going to? And what is interesting here when you look at the numbers in terms of each, so that you look at the broadcasters had a tough 2023, 2024, the question marks, actually in Europe it started off relatively okay for the broadcasters and so forth. Is money going to the online platforms? You're starting to see the growth rate slow. Now, if you take Facebook last year, everyone said revenue numbers absolutely fantastic, great growth and so forth. That was driven by advertising revenues coming from Asia Pac advertisers. You look at it, it was up 30% of 2023, nearly double the revenue growth. If you look for North American advertisers, their spend on Facebook was only up single digits. So I think, one of the big questions we're going to have over the next, let's say, 2 to 3, 4 years is you've got these platforms where there's increasingly question marks from the established markets as to whether money should be going into there. But where does that money go in future? Retail media, does it go to some other segments that come up at the moment?
Right, we're out of time. Ian, don't be a stranger. Ian Whittaker with us, with Liberty Sky Advisors as well.
He's been to the net a few times.
Did you work with Jessica Reif Cohen? Were you on the same watch with Jessica Reif Cohen and Merrill?
In the London team, yeah. Back in the early 2000s.
Very cool. Ian, thank you. So I'd love to get you on with Jessica Reif Cohen. We got much more coming up. Today we're playing jazz from Paris. Her name is Angie Gray.
I used to think your love was something that I could take or leave alone. But now I couldn't do without my supply. I want you for my own. Now I can't break away. I must have you every day, as regularly as coffee or tea. You've got me in your clutches and I can't break free. You're getting to be a habit with me.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Bloomberg Surveillance. Amid earnings, really ramping up here to tech as Paul mentioned earlier, Edward Ludlow will be with us in moments on Tesla. And we've got real on-the-ground reality here in that, he got rid of the Porsche.
Yep.
And when he went, he's in San Francisco, so that's what you do.
That's what you have to do. He went the Tesla route.
Go to lunch.
I'm sure he got a good deal.
Yeah, well, new used? I don't know. We'll have to find out. Ed Ludlow to be with us here in a moment. We're going to make this quick so we can get to Mr. Ludlow to give you a perspective really on an important engineering, technology, and automobile story. We say good morning on Apple CarPlay, Android. I don't think you can get Apple CarPlay or Android on Tesla. We're going to have to grill Mr. Ludlow
we'll check it out.
that. Maybe you can do it with wires and such. On YouTube, search Bloomberg Podcasts with a really interesting live chat. I learn stuff every morning out in the live chat from a good group of people worldwide. It's building each and every day. Futures up 19. They've ebbed flow, but they lift. They lifted yesterday. The VIX was a 19 level. We're into 16.50. Lisa will do that here in a moment. Of course, it is the Interactive Brokers Studios. We say good morning to all of you with our Bloomberg Business Flash. Lisa Mateo.
You got it. And we do have a lift to the markets as the busiest week of earnings season starts to gain some momentum. We have S&P, Dow, and NASDAQ futures all up about 0.3%. The 2-year yield at 4.99%. That's up 2 basis points. The yield on the 10-year at 4.64%, up 3 basis points. To earnings we go. UPS, well, they topped estimates. It also gave an outlook, but Evercore saying the company's ability to meet that forecast still remains in question. Shares are down right now 1%. PepsiCo posted better than expected sales growth thanks to strong demand in its international divisions, but volumes dropped in North America, and that's why shares are down a bit this morning, 0.2%. And after the bell, it's all about Tesla. Right now, they're up more than 0.5%, expected to post a 40% operating profit decline in its first revenue decrease in 4 years. And there's more to come. We have Meta Platforms tomorrow, followed by Microsoft Alphabet on Thursday, and then on Friday, ExxonMobil, Chevron. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Now joining us, Ed Ludlow. He's out on the West Coast, of course, driving forward Bloomberg technology. And really living technology with Tesla as well. Let me start with a general question, Ed Ludlow. Does Elon Musk spend most of his time on Twitter, or does he spend it on Tesla?
I think this is the question ahead of probably the most important earnings call in the company's history this afternoon. I really think that. And the answer I've had from everyone I've spoken to within that company in the last 7 days is that Elon Musk has basically suddenly come back to Tesla. Whether that was literally in the last week or so, I don't know. But metaphorically speaking, he has come back, having been very focused elsewhere, didn't like what he saw, and has started ticking off items that he thinks need changes at that company.
Does he talk about CapEx? When I look at the income statement and I pretend it's a normal company, the elephant in the room is a managed CapEx reduction. Every auto company in the planet, back to Studebaker, Ed, you don't know what that is, back to Edsel or Studebakers had to deal with this. Can they bring CapEx down to spruce up the ugliness?
I think that there's probably a misunderstanding about the rationale behind the sort of savage layoffs that Tesla's just done. So in an internal memo to staff in a subsequent 8K, the language that Elon Musk used was that they would lay off more than 10% of their staff, which was about 14,000 people. But my understanding is he's cutting much deeper than that, probably nearer to 20%, and at least 20,000 are already gone. But this is, despite him stating it in this memo, he briefed his other lieutenants that this is not about cost reduction and managing CapEx, or indeed unlocking capital to deploy elsewhere. It's purely psychological. Elon Musk has always had this belief that no matter how big his companies are, every single employee should be looking over their shoulder and paranoid, literally paranoid, that the company is too bloated and that a reduction in force could come in at any time. That's hard to believe, right? He's accountable to shareholders at the end of the day. He's accountable to running a business, and he's someone that's obsessed with the bottom line. But just take my word for it, that in this instance, his psychology is like, we need to do better, we need to be lean and mean, and I don't want everyone being complacent. That's how his brain works.
Ed, I think the conference call today, 5:30 Wall Street, time is
Yeah.
going to be very, very widely followed here. What do you think, when you talk to your sources, realistically, what can Elon Musk say to restore some confidence in this story, do you think?
I don't know. Confidence is one word. I think everyone's just a bit desperate for clarity.
Okay.
It is chaotic right now. Elon Musk very publicly denied a Reuters report and accused Reuters of lying. And the basics of that report were he's told the company to stop working on a cheap EV and focus on a robotaxi. He said that that report was a lie. Then he very quickly subsequently came out and said, actually, yes, we're very focused on autonomous driving and a robotaxi right now on his own platform X. What we reported over the weekend is that the truth is a blend of those two things. Elon's emotional and intellectual energy is completely focused on a robotaxi. And many of the high-ranking executives at Tesla frankly disagree with him on that strategy. They really wanted to pursue this $25,000 or cheap EV. And Elon told them no. And that actually accounts for some of the high-profile departures of those that left of their own volition. I think that's the single question for the street. Are you or are you not making a $25,000 EV? Are you or are you not focused on a robotaxi?
We got to go personal. Ed, you've had the courage to, I don't know if you bought a used or a new Tesla, whatever. Do you have the truck? Did you buy a fancy truck?
No. God, goodness, no. I leased a new Model Y, and I did it purely for because of the economics. Yeah.
Lisa has bruises from driving down 59th Street. It's like a country road in New York City. How is a Tesla robotaxi going to get from Central Park over to First Avenue down 59th Street?
Yeah, I mean, I can't believe I'm about to say this. With Elon, you've got to give credit where credit's due. And he's at least consistent in some things. He wrote his great thesis in 2016, Master Plan Part 2. And he very clearly explains how that would work. The initial idea was that Lisa would own her own Tesla, and she would hardly ever use it. And so in the time where she's not using it for personal use, she would sign a waiver and release it to a broader Tesla fleet. Think about an Uber platform, but the cars on that platform are made up by personally owned vehicles. And instead of having a driver drive you around, you basically say to your robo-taxi, it is a robot, off you go for the day, go and earn me some cash, do something good for the world while I stay at home. I don't know what Lisa does while she's at home, but that's the idea.
Paul, get in here. But if Lisa gives up her Tesla, they're going to have a robo-taxi with a Saranac green tea spiked seltzer in it.
Oh, nice.
I mean, that's what's going to end up.
So, Ed, I mean, if I look at the stock here of Tesla down 43% year to date, I would argue that a majority of that decline just reflects market uncertainty as to
big time
overall demand for EVs. Do you expect Elon to address that, or is he just going to focus on the day-to-day at Tesla?
We're also, by the way, we're playing earnings bingo again this quarter. So, check that out on social media. It's a lot of fun. Get your libation of choice to go with it. But I think interest rates are still going to be a very key bingo square, right? Elon has leaned heavily into the idea that this high rate environment is a big contributing factor to the weakness in demand for Tesla. And you're right on the stock. It just goes back to fundamentals. I know that's not as exciting an answer as what you might have hoped, but rates are high, demand is low, and even Tesla, which has savagely cut prices to very, very low points, is not able to unlock new demand through that method.
Ed, thank you, troopers. Really, it's going to be a hugely long day for Mr. Ludlow. Thank you so much for starting out early with us. From San Francisco with Bloomberg Technology.
They have a great pantry there. Great pantry there. I mean, the creativity of the food they put out, amazing.
There's not a single thing in it I can eat. It's all healthy. It's just like unbelievable. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul Lisa, a longtime tabloid publisher, is expected to tell jurors about his efforts to help Donald Trump stifle unflattering stories during the 2016 campaign as testimony resumes in the ex-president's New York hush money trial. Prosecutors say former National Enquirer publisher David Pecker worked with Trump and Trump's lawyer Michael Cohen on a strategy to call catch and kill, to buy and then spike negative stories. Pecker testified briefly yesterday and will be back on the stand today. Meanwhile, prosecutors are expected to tell a judge Trump should be held in contempt over social media posts they say violated a gag order. Trump faces 34 felony counts of falsifying business records but denies wrongdoing. The city of Baltimore officially filed a lawsuit against the owners and managers of the Dolly container ship. The suit alleges alarms showing an inconsistent power supply on the Dolly sounded off before leaving the port of Baltimore. Baltimore City Councilman Zeke Cohen.
This is about Baltimore uniting together, standing strong amidst this tragedy, and making sure that people are held accountable that played a role in it. 6
construction workers on the bridge were killed. It is the Senate's turn on foreign aid. Bloomberg's Amy Morris has a preview from our 99.1 newsroom in Washington.
Senators had planned to spend this week taking part in congressional delegations around the world or meeting with constituents back in their home states. Instead, they're back on Capitol Hill for the first votes on a $95 billion foreign aid package. They'll start with a key test vote, cloture, to limit debate before a final vote to pass the bill. Now, this bill includes nearly $61 billion in aid for Ukraine, more than $26 billion for Israel, and more than $8 billion for the Indo-Pacific. It also includes measures to seize Russian assets, require TikTok's Chinese owner to divest the app, and impose sanctions on Iran. The first votes are set to take place this afternoon. In Washington, Amy Morris, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Let's listen to New York Knicks radio.
Here's Maxey into the front court with 2. Maxey got to shoot it, gives it to Embiid. Three-pointer at the horn, no good! The Knicks win to go up 2-0 against the Philadelphia 76ers.
Local drama last night, 2:21 a.m., the New York Post. Frustrated 76ers going to lodge a complaint after a brutal loss. Can they do that?
They can. They said there was the TO there, but hey, who knows?
Yeah, please. You know. Come on, it's the Garden. Go back down to Philly.
Well,
See what happens.
Well, they're going to go back down to Philly.
Yeah.
Can you imagine the awakening the Knicks are going to
have? Oh, man.
Those Philly fans, the Philly fans are like no other fans. They are tough. They are tough.
Do you guys, I'm removed, full disclosure, folks, I'm removed from this, but does it feel like what we in hockey call the original 6 is just great to see just traditional?
The best way I heard it described, Danny, my buddy, worked here, said this is old school basketball. Now they put on their big boy pants and are playing like they used to play.
The last couple of minutes, Doug Cass sent me the video. Thank you, Doug. And it looked like high school basketball where half the team is football players which don't know what to do in the winter. It was physical.
It was physical, and they were just going after it, diving for loose balls. And
I'm going to talk about this in
very
2 seconds.
All right.
Okay.
Good stuff.
Okay.
Well,
it's going to be good.
It's continuing team coverage here.
It's so exciting.
Surveillance futures high for the day up 21. Tesla this afternoon. Tim Stevanovic and Carol Masser with our coverage of Tesla. Bloomberg Surveillance. Good morning.
headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have NASDAQ S&P futures up 0.4%, Dow futures up 0.3%. To the bond market, the 2-year yield at 4.98%, up a basis point. The yield on the 10-year at 4.64%, that's up 3 basis points. Over to commodities, we have spot gold lower at $2,313 an ounce. Brent crude, $86 a barrel. NYMEX crude at $81 a barrel. Back to earnings we go. Lockheed Martin, their shares are a little changed. First quarter operating income beat expectation. It delivered more fighter jets and missile systems. Then you have investment management company Invesco. They're down 2%. Reported adjusted net revenue the first quarter missed estimates. And finally, tobacco company Philip Morris International. Shares are a little changed, but it cut its adjusted earnings per share forecast for the full year. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Hugely anticipated this morning. Michael Darda joined us here. First of all, I got to say, Carol Massar just emailed. I'm in the Carol Massar timeout chair.
Oh, no, you don't want to be there.
Tim Stanovic, and, I can't, I don't know. Help me here, Bob.
Yeah, well, Bob was of no help whatsoever.
I need to pronounce her. Lisa Mateo, it's a struggle.
Yep.
Michael Barr, bigger struggle. Carol and Tim this afternoon with the Tesla coverage. Right now, Michael Darda, hugely anticipated this morning, and a great group of conversations with Roth Capital Partners. Michael, I got to go to your idea of tail risk, and I want to get away from the Greeks of Amy Wu Silverman. We had a great conversation with her about the dynamics here. The instabilities in the system, how can our listeners and viewers see them? How can they see the tail risk to the left, grim, or the tail risk to the right, boom economy?
Thanks for having me on, Tom. Well, I think it comes down to what the market has priced in. And we've heard a lot about immaculate disinflation over, say, the last 6 or 9 months. But the last few months, we've had higher inflation readings, and now we're starting to see some market turbulence. So when you have equity market valuations run up the way they did late last year coming into this year, I think the focus really should be on the tail risk scenarios. On one side of the tail, obviously, you'd have recession, the end of the business cycle. Nobody's really talking that anymore, although I still think that it is a material risk. On the other side, you have inflation. The nominal GDP is just too hot, and we outrun productive potential, and that creates an inflation backdrop where the Fed cannot cut rate and either has to maintain the current stance or even tighten further. And that's been what's hitting markets recently.
Well, Thierry Wizman with us from Bear Stearns and now Macquarie with us this morning. We had a real good discussion on the nominal space. Michael Darda, what's the quality of our nominal GDP now? Is it an animal spirit that can continue to drive good or better corporate earnings?
Yeah, that's really the $100 million question, Tom. We had a nice boost from the supply side last year, but that looks like it was more global supply chains righting themselves than some kind of a sustained pickup driven by productivity growth, right? So probably that's going to be more temporary in nature. If the underlying trend for the productive potential of the U.S. economy is still around 2, and the Fed has an inflation target of 2 that they're serious about, then top line growth is going to have to be curtailed and constrained to about a 4% pace. If productive potential is faster than that, then we can enjoy faster nominal GDP growth. But that's very uncertain at this point in time. If you look at the tracking estimates for Q1 GDP, the expectation is 2.5 to 3 real and a 3% GDP price deflator. So 5.5 to 6 nominal. Wow. If 4% is sort of, that's going to be too hot for the Fed.
So Paul, but that's just game changing. And here, Darda's expert on this, folks, and to frame out 5.5% nominal GDP central tendency changes our world.
Michael, if you were to advise the Fed here on inflation, what would you tell them? Would you tell them that, boy, the data we've seen over the past 2-3 months is, I don't know, I hate to use the word transitory, but a blip? Or do we have a resurging inflation problem?
Yeah, I wouldn't get overly worried about the last few months, because I do think the Fed is in a restrictive posture, and over time, not every single quarter, but over time, I think the trend in nominal demand is going to be down, meaning a slowing pace of nominal demand. And that's what we've seen over the course of the last few years, right? I mean, we had booming double-digit nominal GDP growth in 2021. 2022 was slower, and last year was slower than 2022. So this year, again, we're still running above trend now in Q1, but for the year, I think we're going to be much closer to 4%, if not somewhat below that. And these sticky price inflation metrics are going to bounce around a bit, but I wouldn't get overly concerned about the most recent readings. If you look at bond market inflation expectations, still contained at levels consistent with roughly price stability, 2% on the PCE deflator, which is the Fed's formal target. And we have some higher frequency data that mimics the real economy. The Dallas Fed puts out a weekly index of weekly indicators that scaled the real GDP growth. It's running right around 2%. So that looks much closer to trend than maybe what the Q1 GDP figures suggest. So I wouldn't get overly worried here that inflation is going to take off like a rocket.
All right. Well, how about another data point that the Fed looks at is the labor market. Labor market continues to look solid. Any cracks there from your perspective?
Yeah, I don't know if we have cracks, but we definitely have some disturbing divergences with respect to the survey data, which is really weakened, and the actual numbers, which have been quite strong. So, payroll growth in Q1 was absolutely booming. Yet, if you look at the ISM non-manufacturing index, the underlying labor market index has been below 50 in 3 of the last 4 months. And that's something you typically see with even negative payroll growth. The NFIB, the small business group, they have a hiring plans index, leads the unemployment rate by 6 months, recently crashed to the lowest level since the recovery began. So some of the forward-looking survey-based indicators are telling us that there's maybe not so much sizzle in this labor market as widely
Michael,
believed.
The optimists talk about staying with quality, staying with large cap, owning those big tech companies. Is the rationalization of staying with these juggernauts, even if they stumble, that we're all just extending our terminal value out, that the new 3-year or the classic 7-year terminal value is to look at Microsoft out to an adjusted 10-year terminal value?
I guess that's one of the arguments, Tom, but I come back to valuation, and the infotech sector ran up to almost a 30 forward multiple at recent highs. And that's even above where we were in late 21, early 22, just before a very steep decline. And, bond market interest rates are up above 4.5 now. They were 1.5 back in late 21, early 22, the last time we saw valuations close to where they were just recently. So I think on these large cap growth stocks, the valuations are simply high to expect really robust forward returns. I would look at, if investors want to be cyclical, I would look at more of the value-oriented cyclicals, or, how about a sector that's underperformed with this recent rate shock, like utilities? You have some insulation from the business cycle.
There we go.
If we do run into that tail risk of, the Fed staying higher for longer and a recession occurring at some point, they do happen. The utilities, I think, are a good bet.
Darda, do you think, remember, Paul, the simple solution was for yield, buy D.
Yeah.
You just bought Dominion, you bought a million years ago.
Yeah, absolutely.
Darda, utility analyst. Michael Darda, thank you so much. Greatly appreciate it there. And I love talking to the people that synthesize world-class economics into the equity markets. It's a really, like Ed Hyman, Michael Darda, it's a really rich discussion. Futures, it's a Sweeney rally. I mean, Monday, Tuesday.
Yeah, we'll take that. Up a little.
Remember,
0.4%.
we were ready to slit our wrists Friday afternoon.
It was a 5% drawdown, Tom. Oh my goodness.
Drawdown.
That's what they call it.
Yeah, it's a drawdown. What we know, we need to get the markets open again this afternoon. Tim Stenovic and Carol Massar.
Nailed it.
Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. It is all about earnings this week. There's plenty of it to report. We have about 180 companies to report this week, representing over 40% of the S&P market value. We've had a couple companies open their books already this morning, including UPS, GM, PepsiCo, with all eyes on Tesla after the bell. Will we see a lift to the markets once again? Let's check in right now. We have the S&P 500 up 0.4%. The Dow up 0.3%. The NASDAQ is up about 0.4%. Over to the 2-year yield at 4.98%, up 1 basis points. The yield on the 10-year at 4.63%, up 2 basis points. To commodities right now, we have spot gold lower, $2,311 an ounce. Brent crude, $86 a barrel. NYMEX crude, $81 a barrel. To currencies, the dollar weaker, Japanese yen weaker, euro, British pound stronger. We have Bitcoin down about 0.5% at 66,161. That is your Bloomberg opening bell report. Tom and Paul.
That data check was on the edge of Karen Moscow.
It was?
It's like,
yeah.
It's like 4 hours of world-class data checks.
I know. She's a pro. She knows what she's doing.
She's amazing. Lisa Mateo, thank you so much. Here's the way it works, folks. Michael Barr gives us the leadership every day. Michael Barr is the best in the world. It's just giving you the news. We treasure every day dealing with Michael Barr. Michael Barr, Lisa Mateo, Paul Sweeney, and I, under John Micklethwaite, our editor-in-chief, we're journalists. So we try to keep our opinions out of it. We make jokes about an idiot like me. But we have people around us who are allowed to give their opinion because they don't work directly for Bloomberg News. Barry Ritholtz, I remember the first time I met him, he was in some seminar or something. The room was spellbound over the wisdom and the completeness of the attorney's comments on economics, finance, and investment. He's at Ritholtz Wealth Management. His podcast for Bloomberg, Masters in Business, is world class. Yep. And he's written a scathing essay on Elon Musk and the Venn diagram of Tesla drivers. We're going to listen to Barry Ritholtz here. Only Democrats drive Teslas? Is that the basic theme?
No, but you mentioned the Venn diagram, and you look at who are the early adopters of a new technology like an EV a decade ago, when there really wasn't much of a charging network, where there were a lot of compromises to say, hey, I believe auto exhaust is bad for the planet, it's bad for my kids, and blah, blah, blah.
Right.
And so when you look at the demographics of who have been buyers of Teslas, there are people who don't think global warming is a hoax. There are people who like new technology. There are people who think your personal decisions can have an impact. And so they were willing to spend more money on a less convenient vehicle in order to have a positive impact. And they catapulted Tesla to $1 trillion market cap and into the S&P 500.
But to cut to the chase here, Musk's behavior in the last X number of years with Twitter, X, and with Tesla, you're suggesting he's literally pushing away the meat and potatoes of his revenue stream?
Well, stop and think about his behavior not only since he bought Twitter/X a year and change ago, but since the 2020 elections. If you're, and again, I give him all the credit in the world for not only moving the engineering and technology of electric vehicles forward, but dragging the rest of the auto industry into the EV space out of sheer terror of Tesla doing to them what Bezos and Amazon did to retail. But since then, if you're selling a product that's zero emissions, that appeals to, not just Democrats, but people who are concerned about the environment, they're concerned about exhaust, they're concerned about global warming, draw that Venn diagram, and there's a huge overlap with college-educated, urban, left-of-center people who are I don't want to just call them the Greens, but there's a huge representation amongst Democrats. And you have to stop and say, if you're the CEO of an EV company, why on earth would you spend a year or 3 alienating what looks like your core customer base? It's so perplexing. It's such an unforced error. And what have we seen? Over the past 3 years, we've seen a huge run of competition from basically, you look at the auto industry that's jumped in. 5 years ago, you couldn't walk into a store and buy a Rivian, a Ford, a BMW, a Hyundai, a Kia, VW, Audi, GM, Fiat, Mini, Porsche, Volvo, Nissan, Lotus, Renault, Polestar, Toyota. You can even get an electric Maserati or Rolls-Royce today.
Which, by the way, that's a separate conversation.
The competition is astounding. You should be kissing the butts of your core clients, not
can we say
sending
that on
them
radio,
away.
Lisa Mateo? I mean,
so
we
Barry, you're a professional investor here. Let's look at the dollars and cents here. You talked about $1 billion valuation.
Trillion
dollars. Thank you very much. We're down 43% year to date. That stock is. The market cap is now $455 billion. What do you think Elon Musk should say on the call today, or will say, or should say? Because I'm going to listen in. I'm going to dial in.
He should say, let me introduce you to the new CEO of Tesla. I'm the visionary who brought it this far. I'm going to step up to executive chairman. I'm going to put someone in my place and then shut the hell up and allow Tesla buyers to come back in. But we know that's not going to happen. So instead, he should talk about new designs, because their designs are all pretty long in the tooth, what they're doing to take that 10-year lead they had in software, which is now, I don't know, 2, 3, 4 years, and how they're going to continue to extend it, and how they're going to bring more people into the fold, into the EV fold.
Masters of Business, I want to give you some time here. Give us one vignette of the excellence, what you've learned in your podcast in the last couple of weeks. Give us one moment.
Very related to what we were just talking about. Every investor I've spoken to who has a great track record, this past weekend was Asahi Shah, head of Goldman Sachs Asset Management, the CIO. The humility of recognizing how little we know, how random the future is, how difficult it is to predict. Every person who has been wildly successful, no matter how much wealth they've accumulated, there is a humbleness that is just always so surprising. Because not only do they know, I'm going to channel Rumsfeld, not only do they know what they don't know, but they are very much aware of all these blind spots that they have, and they live in constant concern about, how do I make sure that something I haven't thought about doesn't torpedo either my portfolio, if you're a fund manager, or my company, if you're a CEO.
What are you hearing from your clients? It's after tax season right now. What's the mood of Ritholtz Wealth Management? They all in cash?
We never go all cash. We have extended the duration of the fixed income portfolio not too long ago. Hey, anytime you could get 4.5%, 5.5% after a long run of practically zero is great. And if you, depending on the state you live in, munis remain attractive, very attractive. But when we look at equities, if you look around at the world of small cap value, momentum, I'm not going to come out and pound the table on global because it stunk for years. But when you look around, stocks are not having a terrible year.
I got 1 minute left. Belchunas was rude yesterday. All he wanted to do was talk about the 76ers. You, more than anyone I know, adored the Knicks in the worst of the worst times. This is fun.
Oh, my goodness. I came home from family dinner last night and watched the highlight reel, not knowing what the outcome was. And that last-minute three-pointer, the sheer chutzpah to say, I just clanked it off. Give me the ball back. That was, dare I say, Jordan-esque or Reggie Miller-esque to say, I'm the assassin. Give me the ball. I'm going to get this done. Instead of going for the tie, we're going to win. That's a backbreaker for the other team. To come back from that, that's devastating.
Yep.
We're going to see
Gotta
Barry Ritholtz.
love
Thank you
what the
so
Knicks
much.
are doing this year.
We got to get your chair out. Lord Barr wants to sit in the chair right now. So, Barry, you got to get up. Mr. Ritholtz, master of business, really master in business, I should say. Really can't say enough about it. These are extended interviews. Ritholtz has an entire agenda of interns who book him the best
Every
people
week
out
they
there.
get great guests.
Yeah,
Every
well,
week.
he's got 3 or 4 interns.
Okay.
It's the way Ritholtz rolls.
Yep.
It's great. Dow up 74 points, just 0.2%. Critically, the VIX 16.45. With our news in New York City, Lord Barr.
Thank you very much, Tom, Paul, Lisa. Testimony is expected to continue in the New York hush money trial of former President Trump, but not before the court hears arguments about whether Trump should be held in contempt for violating a gag order. During the jury selection last week, prosecutors called for Trump to be held in contempt for what they say were multiple violations of the gag order on social media. Prosecutors have pointed to a post in which Trump shared a New York Post opinion piece that called Trump's former attorney and key witness in the case, Michael Cohen, a serial perjurer. Trump just arrived at the courthouse and slammed President Biden before reporters.
And I can tell you, he's no friend of Israel, that's for sure. And he's no friend of the Arab world either. You take a look at what he said. He's no friend of, he doesn't know what to do. He doesn't know what to do. He wants to take like a middle ground, and oftentimes that doesn't work, but it's certainly not working here.
In another post cited by prosecutors, Trump quoted a conservative news commentator who baselessly claimed that liberal activists were lying to try to get on the jury. While former President Trump is in a Manhattan courtroom, President Biden will be in Trump's home state of Florida, putting a spotlight on abortion rights. Bloomberg's Jody Snyder has more from Washington.
Abortion rights are obviously something that the current president is trying to run on. They see this as a winning issue, particularly among younger voters and women.
Bloomberg's Jody Snyder reports the president will blast Florida's upcoming 6-week abortion ban. Baltimore is blasting the owners of the Dolly cargo ship that lost power and slammed into the Francis Scott Key Bridge last month, causing a collapse and the deaths of 6 construction workers. In a court filing, Baltimore says the company knew that there were problems and they're trying to avoid paying. Today, the Senate plans to vote on a $95 billion war aid package to Ukraine and Israel. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
And Michael Barr, thanks so much. What a great set of conversations today. Paul, what'd you learn? I got like 8 ways to go here.
Yeah, I mean, I think the one of the real questions here is, I think the earnings are coming in, I think generally okay, but boy, is it all about this earnings release for Tesla is going to be so important for the company and for the stock. Dan Ives of Wedbush Securities says this is it. I mean, Musk either reestablishes some confidence in himself and in the company, or not.
I'm not going to comment on it. I think it's such a powder keg. I thought Barry's comments as someone outside Bloomberg News were totally appropriate. It's up to him what his opinion is, but our job is to report it, and we will do that. Tim Stenovic and Carol Madison will give us the folks. You have no idea. At least I got Michael Barr right today. Stenovic came up to me in a food court. He says, "What are you drunk?" And I, shh, don't talk.
What's in that tang?
What's in that tang, right?
Yeah. Anyway, yeah. Well, exactly. Well, it can be. It's absolute. I mean, you know.
And pass it over. So,
Megan Shu's in charge of my absolute mornings as well. Thank you, Megan, for the absolute truth as we move Tang Zero to a better place. Paul, we got to lift to the economy.
We do.
Even the people globally, I don't hear them saying sell tech.
No,
it's
I
not
mean,
there.
no, I mean, I think, and it kind of goes back to that top line story we've been talking about. And we'll see what the earnings coming up at this period of time. But at the end, we know the margins are there. And are we going to get a reacceleration of tech spending, which Bloomberg Intelligence is calling for in the back half of 2024?
Our world-class market live this afternoon for all of you on the terminal from New York City with the Dow up 85 points. Bloomberg surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks are advancing. The Nasdaq up nearly 1%. The S&P 500 up 0.7% or 36 points. The Dow up 0.5% or 159 points. The 2-year yield at 4.94%, down 3 basis points. The 10-year yield at 4.59%, and that's down 2 basis points. To commodities, we have spot gold lower, $2,322 an ounce. Brent crude $86 a barrel. NYMEX crude $81 a barrel. To earnings we go. UPS, their shares up more than 2.5%, reporting higher profit, result of its headcount management and restructuring its delivery routes. Then you have PepsiCo. It posted better than expected sales growth. That was thanks to strong demand in international divisions. But here's the thing, volumes dropped in North America, and that's why its shares are down. They're lower, down 2%. JetBlue said revenue this quarter will fall more than expected, and that's due to excess capacity in Latin America. JetBlue shares down 11%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Program note, thank you so much for the social media, the YouTube live chat feed. I love this. This really helps me. Thank you, the reader. I have been listening to Bloomberg Surveillance for the last 7 years, my deepest sympathies, on Tesla using TuneIn. TuneIn is a wonderful radio service.
Awesome.
Like you can get Duke basketball. They got everything out there. You know, they got the workout show with Lisa Mateo.
Yep.
Thank you for that. And then we got another really informed one. Shout out to Paul from Summit, New Jersey. 7th grade lax. Coaches are all Wall Street D1 athletes. And the head coach was a long stick for John Hopkins.
Yeah.
That's lacrosse talk, Lisa.
Thank you.
Long stick is like midfield, and they walk. The stick is like
they slash
really
people
long,
and they smack them. It's
carve
crazy.
them, and
Who
they,
knew?
you know, you can't do that in hockey. They really hit each other. It's like vicious.
That's big time. Yeah.
Thank you for
And
that.
the girls they really go at it.
Yeah,
Tough ones, got to be tough.
Thank you for the junior high lax. They're playing that like 13 months of the year now. You go
Yeah.
to camps.
Opposing coaches don't like it because then they drive into Summit. They notice that every yard has a lax net on it.
It does.
And they're like, oh boy, now we got to play against these
And
guys.
I'd also say we got to get to Joe Matthew, but I also wanted to say the biggest scam is lax camp at Disney World. It's for a week, and then you realize a week is 4.5 days. That's how they're ringing the register.
All right.
Good morning. Fighting Tabor Academy up
Very good.
on the shore. Joining us now, he knows where Tabor is, Joe Matthew. Joe Matthew is the only one who's been almost as many times as me to the Dunkin' Donuts at Route 24 and 495. Joe Matthew joins us now in Washington, Bloomberg Balance of Power. Joe, what's your number one focus with the White House right now?
Time wasted, productivity lost. This bill everyone's talking about today that we're all going to freak out about and cover, that's going to pass the Senate and guarantee money to Ukraine and Israel, is the same thing that they passed back in February. We just wasted months yelling about the border. Nothing was done on that. And now Mike Johnson gets to sit back with the biggest bodyguard in the schoolyard because nothing matters anymore. Donald Trump has decided that this is the speaker for now. The question is, does anything else happen, I guess, for the rest of the year?
Would you suggest that this risks a Republican majority in the House, or dare I say the Senate?
A majority of one, yes, is the answer. But of course, another speaker battle would make it worse. Democrats do think they've got something here. I mean, we've got Republicans coming on the air talking about a coalition government now. It's almost as if Republicans are no longer in the majority already. So imagine what it feels like in November.
We're all going to have British accents like Pharaoh.
Exactly.
Parliamentary.
So, Joe, what does President Biden do here? I mean, we've got former President Bush. He's occupied in Lower Manhattan here. Is there a tact here for Biden to try to take advantage of kind of what's happening in the rest of the world?
Oh, yeah. And they're already doing it. I mean, this is the beginning of the real split screen. It starts here today. They're going to do this dance about the gag order with Donald Trump while Joe Biden is in Tampa. He's even going to Florida, where Democrats don't win the presidency in the last 10 years, at least, to try to beat the drum on issues that try to make the contrast with Donald Trump. He's going to talk about abortion. That 6-week ban is about to kick in. Got to remember, Joe Biden last time was doing these honkathon rallies where during COVID, people would drive their cars in and honk instead of clapping, they had the big white circles. He's actually not done this for a really long time.
Right.
So they're kicking him out on the road as often as they can to have that split screen on the news at night. This is going to become more difficult by the day for Donald Trump, it seems like. This is going to be more difficult to raise money off of and actually look like the victim here, that the way he wants us to.
So is the thinking in Washington here, just from the legislative standpoint, was this a victory for, when I say this being the spending bill, a victory for Speaker Johnson, a victory for the Democrats, a victory maybe just for the people of Ukraine and the Middle East and Taiwan?
I think it's an all of the above.
Okay.
You can qualify this coalition government or power sharing thing however you want, but the fact of the matter is, we saw real concerted bipartisan action here. All of these spending bills passed by 300 votes or more. It was kind of like the good old days.
Yep.
This used to be considered normal. Now it's a freak out and a reason to fire the speaker. So yeah, it seems like a win for Joe Biden. That's clear.
Right.
But I'd say it's a win for Mike Johnson. Certainly if he doesn't get fired in all of this, it's certainly a win for the people of Ukraine. We're going to have a last minute spasm today, by the way. Look for Bernie Sanders on the left to be very upset about Israel, looking for amendments, and Mike Lee from Utah about Ukraine. He wants to make sure this is a loan that they'll someday pay back.
Joe, it's almost to May. They're starting to figure out the seating chart at the conventions. Just as a general rookie question, will the conventions be anything normal?
I thought you were going to ask me about the seating chart at the White House Correspondents' Dinner, which we need to clear first. But normal? Gosh, I don't know. Chicago has a lot of people concerned. We're not going to be talking about contested conventions, so I guess normal in that sense. I'm more concerned about what's going to be going on outside of the convention halls than inside, which will probably be pretty formulaic for Trump and Biden.
So are you suggest what's going to be outside the convention halls? I mean, what
Well, I think there's a real worry for civil unrest, for violence, particularly in Chicago.
Okay.
When you start talking about divisions in this country, let's give this 6 or 8 weeks of Donald Trump in a courtroom and see how we feel.
Sounds like the Red Sox. Give them 6 or 8 weeks. Joe Matthew, thank you so much. Balance of power.
Good to see you.
Just really can't say enough about. They synthesize it in, and they get away from the sort of the de rigueur inside the beltway, blah blah blah. Joe Matthew, Kaylee Lines there as well. My head is spinning over the level of intelligent conversations today.
I mean, it's like our.
I don't even know where to begin with the Dow up 140 points.
Yeah, we had some smart people in here today talking about the markets, talking about the economy, talking about individual securities here, both equity and fixed income here. There's obviously geopolitics, as Joe Matthew was just mentioning. That remains front and center here as we think about Ukraine, the Middle East, and so on. So there's a lot for investors to get their heads around. And then, of course, lots of earnings data all week.
Now let's focus on the earnings here and in the close here of the hour. Emily Grafeo coming up. It's the Emily Grafeo Show with Paul Sweeney.
Absolutely. I'm just
coming up
hanging out
here at 10 o'clock. But I really would suggest that the earnings coverage will be something. And the great partition here is it's earnings-centric, EBITDA-centric, which is a sort of a combination of the balance sheet and the income statement. And I would say, Paul, I'm revenue-centric. I really want to see, on a single-digit basis, if revenues surprise higher. To me, that's the great mystery.
Yeah, that'll be, and that's something that Gina Martin-Adams from Bloomberg Intelligence highlighted to us, I would say a week or two ago, saying focus on revenue here this quarter, because we've seen, the companies really manage their margins, their costs well coming out of the pandemic. Now it's a question of, okay, where's the reset here in terms of top-line growth for a lot of these companies?
Paul turned to me in the middle of the hour, too, and he says, why are we playing jazz from Paris? Put on Springsteen. And we pulled rank today. I've never done this. It's a daughter out of Paris with an album release party last night.
Really?
I did not attend. They said, album release party in Paris or Paul Sweeney. What do you want to do? I said, Sweeney. No question about it.
Yeah.
But it's been a hell of a journey. I think a lot of people listening, your kid says, I'm moving here or I'm moving there. It's like, yeah. But, you make something of it. So it's one of the offspring with an album. It's a jazz. So jazz are serious.
Oh, yeah.
Their whole structure is completely different. Like you can actually make a living at it or something rumored to be. This is Angie Gray. She wrote this song about another daughter. It's like,
Really?
It's like too much.
Okay.
Don't tell me that it's sudden. I've been feeling this for a while. Don't tell me that you're hurting. when I've loved you all this time. Oh, I know, but I can't help it. I'm an undercover romantic. Oh, I wish that I could love you less.